and gentlemen, is you can put the time in to study to learn a few patterns. Hey, PFI, good to see you back in here. Damien, too. What's going on? So what we're going to do, what we do every day, because I enjoy the heck out of it, I hope you do too, is we're going to go through and we're going to talk about the foundation, building a foundation, learning to read indicators. But before we do that, we're going to check news, guys. And this morning, what is today? Thursday. At 8:30 a.m., there was unemployment claims. And then, guys, at like 8:45, the market spiked. And all you reacted in the room, holy smokes, oh no, the market spiked. That's crazy. I'm not touching it. I don't disagree. When it spikes like that, it's too fast to trade. It's so fast to trade. But I dropped this in there. If you look at what happened during that spike, it came from a termination condition that we're going to talk about today. Resistance broke, behaved as support. Resistance broke, behaved as support. Potential to break but didn't. Potential to break but didn't. Continuation down from bad bottoms. We see this every day. There is support right up to resistance, and I just made $300 right there. Guys, this is one of those things. I work for Nexgen, obviously. I've been watching these fibs, these areas, these indicators for about the last 5.5 years. I'm still floored. I am absolutely floored at the effectiveness of these areas. I want you to be too, but it comes through repetition, guys. It's difficult to be blown away and convinced 100% right off the bat. You've got to put some work in. You got to put some study in. I've had some great conversations in the last 24 hours. So today, we're going to go through and we're going to do what we did yesterday, guys, but I'm going to have a different motive, I believe. I'm going to have a different approach. We will talk about the high probability trend trade. You're going to find all those rules right here in the education page. We're going to talk about building trust today a little bit. That's going to become this underlying theme of the day, building trust. How do I build trust in a methodology that's been proven to win more than it loses? How do I build trust to the point to where I don't hesitate to take the trade? Good afternoon, Miss Jen. And we're going to do it based on the high probability trend trade. Guys, I did a little bit of study yesterday, and I'm going to tell you, it took me about 15 minutes, start to finish, to do it. And I had some revelations. So when we get into the second half, if you're struggling with trust, if you're struggling with confidence, if you're struggling with taking the trades when the trades present themselves, I want you to pay attention and ask a lot of questions in the second half. Because it's the same path, but maybe I don't express it loud enough as I should. But let's start doing what we're doing, guys. The easiest way to build trust in something is to not have to build trust in 1,000 things. So we're going to talk about a high probability trend trade this morning. We're going to talk about a trade that's only 3 rules. And these 3 rules come together to allow you to see advantages. You're going to see the market telling you that it's time to get into a trade because you have an edge. And that's really the only reason to get into a trade. And we're going to do that. And it's going to be your ability to read your indicators that's going to allow you to see this. This is what the high probability trend trade does for you. Now, here's my first disclaimer. The high probability trend trade, ladies and gentlemen, is not the only trade that you can take. The high probability trend trade is going to open doors for you. It is rare, if ever, that anyone sticks exclusively with a high probability trend trade. But when you understand the very basics, when you can get these concepts, these 3 rules down, what happens is you begin to realize some things. You begin to realize that 90% of your day is waiting. 90% of your day is doing nothing. 90% of your day is sitting on your hands, playing solitaire, reading a book, doing anything other than jumping into the market when there isn't an advantage. But that 10%, guys, that 10%, when you jump into the market, you jump in with bravado and confidence because you know that you're seeing a pattern that's been proven to win more than it loses. And you will understand by the time you get good and comfortable and confident with a high probability trend trade, you may not even realize you understand it, but you're going to understand where the market is likely to continue. Because this is your entry for the high probability trend trade. This is where you are going to be able to very accurately, precisely define where trends are most likely to bounce, and continue in the direction of the trend. This is your entry for high probability trend trades. You're going to understand where the market is likely to go. This is going to help you not only in managing high probability trend trades, but as you begin to break out of that and find more opportunities, you're going to know when it's time to cut ties with the trade because it's reached that area it's most likely to go to. And you're going to understand where the market is likely to stop. Can you guys hear me? Give me a Y if you can hear me, please. Anybody? Yes? Okay. Let me give Miss Anna a message here. There we go. And guys, do that. If you ever can't hear me, make sure that you tell me in the room. And then you'll see all of these Ys. Sometimes you'll see an FFY from Risky Meister there. But that's letting you know that everyone else can hear me and it may be on your end. Typically a Discord reboot takes care of it. Guys, the final thing that you're going to recognize is where the market is likely to stop. We call these termination conditions. And we call them termination conditions because they are powerful enough to terminate a trend, to stop a trend cold in its tracks, and to kill any chance you have of winning. And we're going to focus on this highest probability trend trade as long as it takes. Your job begins with learning 3 rules. That's all it takes to make this trade happen. It's 3 rules, guys. Each rule, when it's true, provides an advantage. So rule number 1 says that your large chart needs strong triggers, and when you have that rule true, you're going to have what we call the advantage of momentum. When I discuss momentum in this room, guys, I'm talking about a look on a large chart that is difficult to stop. You're talking about a market that is flying in the direction of the trend. It has tons of pressure behind it. And it's just, man, when it's going, it goes. And there's a lot of opportunity in momentum. But we want to couple it and make sure that there's no termination conditions, none of those likely to stop areas. So what you have is a market with all the pressure behind it, pushing it in the direction of the trend, and then you have a clear path. You have absolutely nothing in the way to create a problem. These termination conditions, rule number 2, is the most broken rule because rule number 2 is going to keep you patient. Good morning, Bajoy. Rule number 2 is going to keep you from trading your opinions. Rule number 2 is going to keep you from killing the boredom by just getting into the market hoping things break. Rule number 3 is designed to put you into the market where the market is most likely to continue with the trend, with the momentum, and with the clear path. Rule number 3 is specific to a trend trade. Rule number 3 is going to change for you as you grow with the software. There's no doubt in my mind. These 3 rules, these 3 advantages. Awesome, Anna. Nice to have you back. I want you to focus heavily on these 3 advantages. I want you to say to yourself every time it's time to take a trade, what do I have working for me? What's in my favor? What's producing an edge? What's making things great? Really focus on the positives. Ooh, my wife just kissed me. Dang it. Have a great day. Dagnabbit. Because when you focus on the positive, guys, you're more likely to take those trades when the rules are met, to not second guess. So get in the habit. As you look at your chart, say it out loud. I have momentum, and the cat gets a little nervous, and I have a clear path, and the dog howls a little bit. And I want everyone in your family to know exactly what it is you're looking for when you look for a trade. These 3 rules happen on only 2 charts. Simplicity. I am a right brain, artsy fartsy kind of guy, and less is more for me. So only 3 rules, only 2 charts, and everything begins on the large chart. The large chart is a slow chart. It's a very broad stroke of a brush. And inside of this one bar, the first bar, the most current bar in a large chart, you're going to see the direction of the market. You'll know exactly which ways you're looking for rules to be met. You're going to see the momentum in the market, and you're going to know whether or not you have that edge, that advantage of a market that's hard to stop. And you're going to see the areas that could be problematic, that could stop forward progress, that could ruin your good time. Rules 1 and 2 are met inside of the most current bar, printing on the large chart. You'll be able to define direction, momentum, and areas. Your small chart This is a refinement chart, guys. This is where the precision comes in. Because inside of this one bar on a big, slow freight train of a chart is all of this nonsense on a small chart. There's about 20 to 30 bars that reside inside of this bar when you go down a couple time frames. We use this refinement process to pinpoint precisely where the bounce is most likely to happen to continue with the trend. This is why rule number 3 is on a smaller, faster chart. It allows you to reduce risk dramatically, and it really increases the profit potential because these pullbacks and entries, and you're going to learn how to recognize them, come in from the highest point of that bar typically, which means that you've got the most room to run to get to your targets. We use these two charts because this is my favorite metaphor. I see this in my head when I trade. Who am I trading with or against, guys? When I look at my large chart, I have this image of thousands of men and women with the money and the influence to create trends and establish momentum. And all of these powerhouse people, they react at the key areas on my large chart. And I just want to trade with them because the large crowd typically wins. The small chart I think of as a small crowd. These guys wear leather jackets and they smoke cigarettes outside of the school, and they're fighters, they're rebels, and they create those little retracements, those little pushes. And they're like, oh, big crowd, you want it to go up? I'm going to push it down. And the cool thing is they fail like 70 to 80% of the time. When the large crowd says up and these guys go down, 70 to 80% of the time typically, their fight fails. Rule number 3 is designed to put me in right where they're most likely to fail. So if you have a brain like mine, picture a big crowd pushing everything, making it wonderful. Picture a small crowd doing their best to fight it, and somebody sent you a text or an email and said, hey, guess what? This is where they're most likely to fail. Hop in there. Go with the big crowd. That's rule number 3. Our first hour is learning trigger line and Fibonacci rules for when it's okay to trade. It's okay to trade when the rules are met, guys. When the rules are met, you have an edge. When the rules are met, you're trading a pattern that you can prove wins more than it loses. When the rules are not met, it's okay to not trade. It's okay to not be in a trade if you don't have those advantages. It's all right to sit on your hands if you can't look at your chart and say, I've got everything in my favor. Trading is about making money. Trading is about consistency. Trading is about doing the same thing every day because you can prove that it wins more than it loses. This is tough for most of us because it means that when the rules are not met, it's not okay to trade. It's like having a business plan and committing to follow it. Everybody in the room has the ability to simulate. You can practice, you can get in, you can get out, you can learn how to manage. You can focus on all these different things, and it's a consequence-free environment because it's simulator. The first step in becoming a confident trader ASAP is post your trades in the room. So if you wake up and you're like, hey Mark, check it out. I took this trade. What do you think? And I'm going to say to you, why did you take it? So every second half of this room, you're going to go back and you're going to talk about it. Well, Mark, I took it because I had strong triggers. And Mark, I entered this trade because that fib had the potential to break based on the momentum and the strong top. And then Mark, this is why I entered. I entered at an area inside of triggers. And there's a big difference between showing me something with nothing on it. It's difficult for me to give you the feedback because I don't know how you read your indicators. But if you take a couple minutes and tell me what you were thinking, tell me where you did it, why you did it, what got you into the market, what did you see? Guys, this does a couple things for you. The first thing is it gets you and I in sync. It lets me know how you're reading your indicators. If you are having any challenges with reading your indicators, I'm going to recognize it. We're going to correct it. We're going to go through these lessons. If you are jumping in early, we'll address it. Hey, let me show you where the best entry was. Maybe you're holding just longer than makes sense. I'll say, hey, you know what? We hit 32 fibs and the momentum is gone. Maybe that's a great exit. Let's work on management together. But my promise to you is every time you post in the room, you will get a private session. Now, here's something that I'm going to share with you right now, because we're going to talk about trust and consistency. If you're not posting in my room, but you're struggling, you need to ask yourself why. Why am I not using the coach? Why am I not addressing the mentor each day to get the feedback? Guys, Michael Jordan, Wayne Gretzky, Serena Williams, I don't know, go through LeBron James, they all have coaches. They all have people that sit on the sidelines and they watch them. And they say, all right, I see what you're doing. You're doing this well. Here's what you could do better. Let's go win a pennant. And that's what this classroom is, guys. This is your ability to get feedback every day to make sure that we can correct mistakes. And man, if you know me, you know I'm going to celebrate victories. I love to celebrate victories. So post in the room, especially where things go wrong. That's where we're going to tighten things up and get to where you want to be. So if you're not doing it, ask yourself why. The hope is that you practice the correct rules, that you get in and eventually you go from this, oh my gosh, I'm a cluster foxtrot Charlie of a man, and I'm reeling it into precision. I'm reeling it into rules, because you will make mistakes as a brand new user. Give yourself a little grace. You're new. Don't practice the wrong trades. Don't practice fighting everything. Don't practice holding when you shouldn't hold or entering when you shouldn't enter, because the brain doesn't know the difference. The brain remembers. And if you practice wrong in simulator, you're likely to perform wrong when you go live. We will keep it simple. We will keep it focused. I'm going to hand you a plan. This is where I want everybody to listen to me, please. I'm going to hand you a plan that optimizes your chances of success with two trades: the high probability trend trade and what we call a medium probability trade. It's what we call a 50-50 trade, and it relies on momentum breaking areas. These two trades, ladies and gentlemen, are not the only trades that you can take with the software. The first trade, the high probability trend trade, is designed to teach you to read your indicators so that you can find more, so that you can find your trades. A lot of times, and I'm seeing this lately, people are shackling themselves to this very rigid, I can only take high probability trend trades. I don't think there's anything wrong with that. I just want you to know that you will grow the same way you've grown in everything you've ever done. If you were an engineer in your professional business, first year engineer you versus fifth year engineer you were two completely different people. You're on that path. So embrace it. It's okay. Keep it simple. Learn how to grow. But you've got to learn the looks. You've got to know what it looks like to have an edge, because that's when you're going to strike. That's when you're going to pull the trigger. So we're going to go through it. By the end of this first hour, you will have everything that you need to be successful with the software. You will have a rock solid foundation from which to grow. I expect you to grow. You will grow through posting in the room. You will grow through feedback. And the easiest way to grow, ladies and gentlemen, is to take pictures and use this spreadsheet I'm going to give you. That's the second piece to becoming a confident trader ASAP. I drop this in the room every day. If you haven't taken it yet and started using it, ask yourself why you're avoiding it. Why are you fighting it? Mine was because I was a cocky, arrogant SOB, and I thought I was too smart to need to take pictures. That changed with some pretty big losses. Guys, the first tab is the basic rules. We break down each rule individually. We talk about what it looks like, what it means to you, how to recognize that advantage. In green are the three parts of the high probability trend trade. The first two, strong triggers and clear path. This is the biggest foundation, guys. This is 100 feet of concrete that you're going to build your trading skyscraper on. Once you understand strong triggers, and when there's nothing in the way to create a problem, it opens the door for more trades. First of all, we're going to go through the trend trade. You're going to learn that entry because that's going to help you create a pretty intelligent management plan. But you also have to know what it means to have weak triggers, and you have to know what it means to have a termination condition area that can stop the market. So you're just going to couple three individual pieces to recognize a pattern that has been proven to win more than it loses. You can see amazing examples of that pattern on the client trade section, guys. Over 500 pictures of you guys being brilliant. And what you're going to notice is a lot of the objections that you have to trades. Well, the small triggers turned against me. It was into one-to-ones. You're going to come through and you're going to start to see these. And you're going to say to yourself, okay, these all look the same. Well, that one didn't work. Somebody stole their picture. All of these pictures seem to have momentum, and all these pictures have either a clear path or the potential to break. And all of these pictures seem to bounce right off of areas inside of triggers. And you're going to say to yourself, okay, this is the pattern. There's things that affect it, there's things that don't, but it's that going over and over and seeing it over and over and testing it over and over, guys. That's what creates confidence. Confidence puts you in the market when you have an edge. If you don't trust your methodology, you're going to find a way to talk yourself out of it. Again, I'm speaking from personal experience, guys. I did it. I found every reason not to take a trade because if I wasn't in a trade, I couldn't lose money. I was terrified to lose money. You've got to get over that to be a successful day trader. Here's your entry sequences, pinpointing where the small crowd is most likely to fail, ideas on management, things that repeat themselves all day long. And then you've got the build your plan section. Guys, this is where you're going to take a lot of pictures. You're going to take pictures of your patterns. You're going to take pictures of high probability trend trades. And you're going to say to yourself, okay, this is my look. This is what it looks like. And I was talking with my wife last night because I taught her how to read indicators. She said, Mark, you used to circle things on charts and say, this is what it is. She goes, and I had absolutely no idea what it meant in the beginning. And I had to remind her, oh, of course you didn't. You're brand new. I said, but once I said, this is how you study it, this is what you look at, she goes, the market slowed down. The market slowed down for me. I went from seeing trades 3 minutes after the trade to seeing trades 30 seconds before the trade, a minute before the trade. And it was that repetition, guys. It's that repetition that creates recognition. So you're probably not going to become a rock star day trader from just trying to flounder in the market. I'll just take all the trades and hope I suddenly become brilliant. It doesn't work that way. You've got to study these patterns. You've got to put the time in. And then finally, there's the trade tracking. Trade tracking, guys. Track your trades. The CME tells you when you want to become a day trader, get a trade journal. I'm giving you one. And it has a couple sections. The first section is just pictures, guys. You're going to drop the picture of your trade, for example, trend trade short. And when you click on the picture, you're going to notice that it has everything that you need to take a successful trade. This is my pattern. And when you post this in the room and tell me about it, what happens is we're going to address momentum, and this had it. And we're going to address that clear path, and this certainly had it. And then the feedback is where you're going to begin to grow, because I'm going to tell you this was perfect. Put it in your plan. This is exactly what you're looking for. Or I'm going to tell you, hey, you traded into a termination condition. That probably had something to do with why you took a loser. You had the right idea, but you got in too soon, and that created more risk than you were comfortable with. You took the perfect trade, and then it hit its target, and you refused to let go because you wanted to make more, and they took all the money away from you. So you'll get feedback on every trade. And if you wake up every morning, and I promise you, this is 3 to 4 minutes, look at what you did yesterday. This is the trades that I took yesterday. These are the ones that worked. These are the ones that didn't work. These trades, I felt confident. They were easy. I was relaxed, typically because you have advantages. These trades made me feel nervous. When I traded into a line, I felt nervous, and I found that I moved my stops really fast. When I didn't have momentum, I was nervous. And I moved my targets closer, and I made a tick. And guys, if you do this each and every morning, it takes 2 or 3 minutes, but it sets you up for the day. It sets you up to be focused on the patterns that are bringing you success, and it really sets you up to begin to avoid the patterns that are taking that success from you. And that's where I come in. I help you see the things you can't see. When you are in the moment taking a trade, you might believe it is the perfect trade. But if you snap that picture and you start to write those advantages on the chart, what happens is you really have a clarity. You're like, oh, I don't have any pressure of winning or losing. Let me make sure my read was accurate. That study piece, guys, is going to pay huge dividends. Everything you need, that's my promise. Before I take my first break, everything you need to be successful with the software, with the exception of putting in the work to make it easy, putting in the work to make recognition happen quickly. That's going to be on you. So we're going to break each rule down individually, by itself, all by its lonesome. We're not going to worry about entries. We're not going to worry about making money. We're not going to worry about anything other than being able to identify strong triggers first on the large chart. Because this is the advantage of momentum. And guys, I hate working without the advantage of momentum. In order to have strong triggers, it's imperative, it's mandatory that your trigger lines, two trigger lines, there are small trigger lines, these are fast. There are large trigger lines, these are slow. Small trigger lines are fast, large trigger lines are slow. So you're going to use these trigger lines to define momentum. In an uptrend, the background will be green. And because the background is green, in order to have strong triggers, both small and large triggers must be green as well. In a downtrend, both small and large triggers must be red as well. So the colors must match, or you're in that 90%. You don't have strong triggers. Your advantage isn't there. What it means to have strong triggers is that your small triggers are up and above the large triggers in an uptrend. Your large triggers are widening. The small triggers are above. And guys, there is space between the two. There is a gap between the two. And I draw this picture almost every day. I want you to think about scissors. When scissors are open, you can cut. When scissors are open, they can cut you a check. Thank you, Jerry. Guys, open scissors, separation between the small and large. This is your advantage. And when you have it, whether it is smalls below the large, large wide, scissors open to the downside, what this means to you is that the odds are favorable for the market to continue in the direction of the trend. The odds are favorable. Odds favorable momentum is what you're going to hear in the room all day long. OFM is what you're going to see written on charts describing that momentum for the trades that you took. Guys, when I have strong triggers on a large chart, it is hard to stop that forward progress. It pushes a trend. When I have strong triggers on a large chart, guys, this is what I'm looking for to have the potential to break those key areas. When I have strong triggers, I'm going to buy Fibonacci support on a smaller, faster chart. I'm going to sell Fibonacci resistance on a smaller, faster chart. And guys, when I have strong triggers, it's going to help cover some of the mistakes that I may make as I go through the learning process, because this is a freight train, downhill, tailwind, fully loaded. It is hard to stop. But momentum runs out, momentum decreases, and eventually momentum goes away. When the small triggers work their way inside of the large triggers, or when the scissors close. You can't cut with closed scissors. You can only take a stab at it, right? So when the smalls work their way inside of the large triggers, we call this a weakening of the large triggers. And when you have weak triggers, anything can happen up or down. Now, guys, it's no secret I'm a language nut, and I think that words are important. And I want to go through, when I have strong triggers, strong paints a picture, odds favorable, hard to stop, pushing, go, 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 right? This is what I think when I see this. When I see weak triggers, it's weak. Anything can happen. No momentum. Roll of the dice. I don't know what's going to happen. I want you to start to create that correlation. Every time you see triggers separated, I want you to say out loud, strength, strong, pushing, momentum, kick ass if you're the swearing type. And when you see those triggers close, I want you to say, oh, I don't have my advantage. Anything could happen. Guys, when anything can happen, anything typically happens. This is where the market sees retracements from the middle of nowhere most often. This is where the market just reverses at key Fibonacci areas more often than it doesn't. So brand new users, commit to momentum. Rule number one, be willing to avoid weak triggers. Is everybody good with that? That's rule number one. This usually takes people, I don't know, 18 seconds to understand and a little bit longer to trust. And that separation is strength. Once you have all that momentum behind you, you have to make sure that there's nothing in the way to stop the market, guys. You've got to look at it, and you've got to be able to say with a simple recipe, I don't want to trade into that area. I'm probably not going to get through it. That's your termination condition, and that's you trying to make money. Um, Termination condition's false, guys. When there's nothing in your way, you're going to have room to a profit target. Remember, we're here to make profits. We're just going to call it a clear path. It's easier that way. A termination condition is a Fibonacci-based indicator on the large chart that has the potential to stop the market, that may reverse the market, that may create an untradeable bounce. I want you guys to think of these lines on a large chart, and they all have names. We'll go over them. These are where the large crowd is making decisions. These are where the buyers buy and the sellers sell. And this is where fights happen and where momentum goes away. And everything that could drain your account, you're going to find typically happens right by these lines. There are divergence highs. It's a magenta line. It'll print from the top of a pivot, from the very top of a pivot, and it tells you there was a loss of momentum in the push up. And all divergence means is a loss of momentum. And you're going to see the same from a low, a divergence low, and that comes from the very bottom tick of a pivot. And what this cyan line tells you is even though the sellers were in control, even though they were pushing, they lost momentum, and you see it with a cyan line. Divergence is a loss of momentum. I want you to equate the two. You're going to see red Fibonacci resistance. It's a solid red line, and when the market is trending up, this is an area where decisions are made. This is an area that could stop the market, that could create a bounce. Blue Fibonacci support has the same effect when the market is trending down, and then you'll see yellow one-to-ones. Yellow one-to-ones can behave as support in a downtrend, resistance in an uptrend. You will know about these areas long before you ever reach them. You'll see them off in the distance. You will trade to them. They're a great place to take profits. But we define them as a termination condition. I want you to remember the large crowd makes decisions at these areas. So the first step in defining a termination condition is allowing the market to get to that area, allowing price to reach the area. Once the price bars reach the area, I want you to ask yourself, where are my triggers? Price reaches the area, this sets off the decision-making process. The buyers are in control, they're pushing up, the market's going up, life is good, and then they reach this key area, and there's some things that are going to happen. Maybe the buyers are going to exit their position, take profits, and that opens the door for the sellers. Maybe the sellers were waiting there. And then when the buyers get here, we're going to pounce. We're going to double what they have in the market, and we're going to push it down anyway. Sometimes they fight one another right at these key areas. It's difficult to win that fight. So if price reaches the area, we're done with price. The trigger lines will tell the story. Where are my triggers? Well, my triggers are below resistance, small and large. That defines resistance as a termination condition. And a termination condition means that rule number 2 is not met. Absolutely no trades into the area. The market's coming down, the momentum is strong. Maybe you're in a short position and you see that blue Fibonacci off in the distance, and you say that's where the market's likely to go. And then once it reaches Fibonacci support, you have to ask yourself, where are my triggers? And the triggers remain above, and you say, wow, that's a termination condition. Decisions are going to be made here. It could bounce, it could spike, it could reverse, it could take me out of my position. I'll just exit, take profits, and wait for the next one. Absolutely no trades into the area. And here is a little extra tip for you. Every line you hit will be a termination condition, at least for a moment. As a brand new user, it is an outstanding place to take profits. As a more experienced user, you may find times where you hold through these areas. But as a brand new user, it's okay to get paid here. And this is what it would look like in a live market, the first bar. Price reaches Fibonacci resistance. Where are my triggers? My triggers remain below. I choose to not take a trade into that area because my edge is gone, because my advantage is gone. And rule number 2 is rule number 2, not because of the one time that it stops the market, not because it breaks every now and then, but because if you scroll back historically and you look at price reaching a market with the triggers below, more often than not, it results in a loss if you trade into that area. The edge is gone. Waiting for a clear path reestablishes your edge. And you're going to see it in two forms, guys. First is when an area breaks, and areas break all the time. If they didn't, we would be caught in a range waiting for the breakout. The breakout looks like this. First price reaches Fibonacci resistance. The triggers remain below. I choose to sit on my hands and do nothing and wait for the reaction. 10 bars later, good morning, Wayne. Both small triggers and large triggers, both lines of each, get above that area of resistance. That area of resistance begins to behave as support. Guys, my path is clear when the second line of the large triggers gets above resistance, and my path remains clear until I reach the next area. Very often you're going to see areas hold. You're going to see markets reverse. When they reverse, you'll notice that price comes down off of the area, and it hasn't hit anything. Small and large triggers are below resistance. There's nothing in the way. My path is clear until I reach Fibonacci support. And then once I reach Fibonacci support, I've got to go through the process again. Where are my triggers? They're above support. Absolutely no trades. Way to avoid a loser. So the easiest trades that you ever take, well, that's not my picture yet. Let me do this one. This is our, there you go, Wayne. This is the three options at an area. The first option is that no triggers break, guys. The triggers tell the story. And if the triggers remain below resistance, your job, if you're following rules, is to choose to do nothing, to sit on your hands, to wait, to say to yourself, both small and large triggers have to be above resistance before my path is clear. Once my path is clear, I'll look for entries if I have momentum. And guys, this is it. It's black and white for a brand new user. Either it's a termination or it's a clear path. Your ability to know the difference between the two gives you the green light to start taking advantage of areas with the potential to break. And that's what it looks like. These are the trigger lines telling you that this area has the potential to break. If your small triggers smash above that area of resistance, but your large triggers are still below, as long as you have momentum, there's an opportunity to make money with this look. But because it's not a clear path yet, because the large triggers aren't above yet, you will manage these a little more assertively. You will take quicker profits. You'll get to break even just a little bit faster than you would if it were a clear path. And it's your chart reading that helps you identify this. And now this is the one that I was going to tell you. The easiest trades, guys, the highest probability trades, the most likely to win trades you will ever take will be taken with momentum and a clear path. These tails on the large chart, that's your pullback on a small chart, hopefully to areas inside of triggers. This is a potential entry that rode it all the way up to Fibonacci resistance. This is a potential entry that took you all the way to Fibonacci support. So this is what we're focused on right now, the best of the best. And once you can identify the best of the best, you're going to start to catch and capitalize on these medium probability trend trades as well. You will find that medium probability trades, the potential to break, these are going to be the majority of your trades once you get your footing underneath you. But this look is only potential. There's going to be ways to avoid losses on this one. One of the biggest ones is recognizing divergence, a loss of momentum on the small chart. Because 3 divergences on a small chart can terminate a trend. 3 times the market loses momentum in the same price range. That's telling you that this awesome momentum on the large chart may be ending. It may be going away. And this is the small chart giving you a heads up. 3 divergences in the same price range on a small chart will keep me from entering a high probability trend trade. 3 divergences on a large chart, that's what's gonna probably push the market even harder the other way. So before we get to entries, let's just look at a large chart for grins. Lot of action in the market today. Odds favorable momentum pushes down. The potential was there to break, but it retraced. Something happened that killed its potential. And then it continues down and it has the potential yet again, but something killed that potential. Dollars to donuts, there was divergence on the small chart at both of these areas. Price reaches Fibonacci resistance. retraces all the way to Fibonacci support. Momentum pushes it all the way up to resistance, perfect termination condition. From that termination, you get momentum, the potential to break. Ladies and gentlemen, right as class started, I took this trade, I took this picture, and I dropped it in the room. And I want to share something with you. The market went all the way down to here. In that particular trade, I took profits at a blue line that could stop the market. Even though it still went down, that's where my profits were taken. And that was $300 in about a minute. Reaches the divergence high, and this is where the market continues down again. We'll come back and see if that were an entry with the potential to break. Hits support, pulls back to resistance, triggers don't blink, market goes down. And guys, now on the most current bar, I have momentum, but price has reached fibs and the triggers haven't broken. I have to sit on my hands because I'm into a termination condition. Your job, your goal should be to be able to go through and read your indicators like that, to be able to go through and define momentum, define the termination conditions, and eventually you're going to piece it all together so that you can take this great entry. When I have momentum, when I have a clear path, I'm going to go to the small chart. I'm going to rely on that small crowd fight, guys. And my entry is so precise. I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. I'm literally going to wait for the market to come to me. When the market's going up, I'm going to buy it on its way down. And when the market's going down, I'm going to sell it on its way up. The smaller, faster chart, the refinement chart, gives you the ability to pinpoint where that continuation is most likely to come from. So when the rules are met on the large chart, and for me, only when the rules are met on the large chart, I'm going to wait for a reversal bar on the small chart, and you're going to have to sit through the pain of watching it go up without you and remind yourself there is a pattern that's coming, and that pattern produces an edge, and I'm excited to take it, but it means that I have to be patient. I have to wait a minute. The reversal bar begins the pullback. The reversal bar is not your entry. This is actually a little loss in momentum that's hopefully going to get you down to your best of the best area. Once the reversal bar prints, you will be able to define where the retracement is most likely to go, and you're going to use the triggers to do it. Large and synthetic. These are just the large triggers on the small chart. You can use that to define momentum. And the large triggers from the large chart, because price returns to triggers. So somewhere from the top of these triggers to the bottom of these triggers, that retracement's most likely to go. And that's the bottom of it. But trigger lines aren't bouncy. Trigger lines rarely create the bounce in the direction of the trend. You need areas for that. Areas for the high probability trend trade can be Fibonacci support or resistance, yellow one-to-ones, or a mid-band. And it's important that I stress to you, none of them are more important than the other. None are more important than the other. This mid-band has the same bounce capacity as these yellow one-to-ones. And these yellow one-to-ones are going to have the same bounce capacity as a fib. So all you're going to say is the market could bounce off of this mid-band, or the market could bounce off these yellow one-to-ones. And the reality is I don't know which one it's going to be. I don't know if it's going to bounce from the mid-band. I don't know if it's going to be the yellow one-to-ones. Hell, I don't know if they're going to push to the bottom of the triggers. But what I do know is that areas inside of triggers are the most likely spot for a bounce. Areas inside of the retracement zone, more often than not, produce the bounce in the direction of the large chart trend. So you're going to activate a limit order 2 ticks above that highest point of support. This is where trust comes in, because you're going to see a bunch of red bars coming at you, and you're going to say to yourself, oh my gosh, the trend is down. No, it's not. It's an itty-bitty fluctuation inside of one bar on the large chart that says up with strength. You're going to enter on the way down. And what you're going to understand through the century is that you know precisely where the retracement is most likely to go, and you know exactly what's most likely to create a bounce, and you're going to teach yourself to ignore lines on the other side of the trigger lines. Anything below the large triggers, guys, this is where the advantage of rule number 3 is no longer in play. This is where your edge is no longer present, because down here, the small crowd is pushed through everything most likely to stop it and create a bounce. This is where the market should not go. So any of the lines on the wrong side of the triggers, below those triggers, are not a part of your window for entry. In a short trade, large chart's red, large chart's down, large chart strong, large chart has a clear path. Can't stress that enough. Once you understand momentum and path, once you have momentum and path, it's going to help you tremendously. Small chart produces a reversal bar. This signals the beginning of the fight, the beginning of the retracement. Where is it most likely to go? Somewhere below the bottom of the triggers to the top of the triggers. Guys, this is a range. It's a zone. It's sometimes 10, 20 ticks wide. It's the area in that retracement zone. Fibs, midbands, yellow 1-to-1s. It's the area inside of triggers that is most likely to create a bounce. Here we have one line. We have a midband. Your job is to activate a limit order 2 ticks below it. If they come get you, you're in the trade. It's most likely to bounce from here. Anything beyond the retracement zone, anything up here, this is the wrong side of the triggers. This is where the market should not go. Are you guys good with that? When you have momentum and path, reversal bar, define the retracement zone, pinpoint where it's most likely to bounce. This is your entry. By defining where the market is most likely to continue, you have defined where the market should not go, guys. And this is where your initial stops are going to be placed. They say that great traders manage risk before they ever manage profits. Ladies and gentlemen, you are managing risk by insisting on momentum in a market that's hard to stop because it's going in the direction of the trend. You are managing risk by making sure you're not trading into areas that could stop the market. And you're managing risk by taking the absolute best of the best entry right at the area most likely to create the bounce. Because typically, when you put your initial stop 4 to 5 ticks above those triggers, it's pretty darn close to that area most likely to create a bounce. This is where the market should not go. Your ability to understand entries has helped you define the first step in your management plan. Now, this is what I did yesterday, and I wanted to share this with you. I received an email that said, I feel like if I only wait for high probability trend trades, I'll never get a trade. So I'm going to encourage you guys here to do this. And I'm going to go back and we're going to, before I give you all of the paperwork, I'm going to go back and show you some of my study. When the large chart has odds favorable momentum, when the large chart has shown you that it has the potential to break or a clear path, historically, you're going to see a lot of these tails printing. This is rule 1 and 2 met. And I'm going to ask real quick, can you guys give me a why, especially new users? Do you see the momentum, the separation between the triggers? And I'm talking about this trade right here, where my red dot is. This is where the advantage is, guys. This is what it looks like on a large chart. This is exactly what it looks like on a large chart when it's time to take a trade. Right there. And you're making the decision. I'm going to go look for an entry. I'm going to go find a way to capitalize on all of this goodness. Well, at the top of the bar, that's where the reversal bar comes from. And this reversal bar says, hey, go find that retracement zone somewhere between here and here. Go find those areas most likely to create a bounce. It's all the way down here. Guys, if you circle the tail historically on a large chart and it lines up with an area inside of favorable large triggers, this is your pattern. This is what it looks like after the fact. And I'm going to tell you right now, if you begin to recognize what it looks like after the fact, it slows down the market. It makes it easier to recognize the pattern as it produces. This establishes trust because you start saying, holy shit, that's right, I said shit. More often than not, that market continues up from the area inside of triggers. So yesterday I went through this, and I'm going to go to my library. Yesterday I did this for somebody because I tell you guys every day, this is the easiest way to create confidence. This is the easiest way to build some trust in this. Odds favorable, clear path, perfect entry, $100 probably break even. When I give you the management plan, you're going to realize that not every trade is a big winner. Whoops, that was the wrong picture. And then if I go to the next trade, guys, I did all of this historically. Odds favorable, momentum, and a clear path. This one wasn't perfect. I didn't put this in the money thing. But when the large chart's perfect, some of you find confirmation bars, find a way to go get paid. That's kind of a progression. Odds favorable, potential to break, another easy trade. So guys, I didn't take trades. What I did is I went back historically and I started circling tails in crude oil, in the S&P. And when my rules were 100% met perfect, there was over $1,100 worth of profit potential there. When you added in the 50-50 trades, guys, there was $2,400 worth of profit potential. So by going through this process, this is what it did for me. And I'm going to scroll back. And I did it from 8 a.m. because I'm in the Pacific time zone. And for me, it's early. But let me show you what doing this did for me. And I'm just going to do this right here. Here's an opportunity at 10:11. It was perfect. It was absolutely easy money. 15 minutes later, there was another opportunity. That's awesome. That's pretty quick. That's not a long wait. Another 20 minutes later, there's another opportunity. And again, this is outstanding. Every 15 minutes, I'm pulling the trigger, making money. This is exciting. This is what you guys want. But then, from about 10:40 till almost 2 in the afternoon, that's how long it took to get my rules met again. Almost 2 hours of doing absolutely nothing. So what you guys have to do is you have to say to yourself, if I can make, I'm just going to say $400 to $500 a day. I'm gonna do half of the potential from high probability trend trades. If I can make $400 to $500 a day, sitting on my butt, not taking the wrong trades, is it worth it? Is the patience worth it? And what happens, guys, and this is a true story, is suddenly, right about here, you get bored. Right about here, you say, you know what? It's been 15 minutes and I haven't had a trade. I'm never going to make any money. This is never going to work out for me. And you trade without momentum and you lose some money. And you trade into a termination condition and you lose some money. And you trade the wrong rules on the potential to break and you lose some money. And everything you made here goes away. So if you go through this little process, guys, circle tails. Go back and look at it historically and say to yourself, did I have my rules met? Was the advantage there? You're going to do a couple things. One, you're going to realize that you're talking yourself out of great trades. That's what I did. I always talk myself out of great trades. But you're also going to realize that there is an enormous amount of potential to be had in these markets once you learn a few rules. So if I scroll back again, this is the S&P. Is this today? Where are we? So this is the S&P. That was a potential entry. We'll go back and look at it. This was a potential entry. I know it was. I took it. And then I had to be patient. I couldn't get that best look. This was absolute psychosis, right? That was that 8-second run. Blah. And look what it did. Momentum pushed. It pulled back to a fib. Everything went up. It pulled back to a fib. Fib broke. Pulled back to the fib. It came straight from a termination condition. Guys, this software is freaking amazing. Whoops, there's one more circle we're going to do. Does that make sense to everybody? Why am I circling tails? Well, because when the rules are met and I circle a tail, I have the ability to see a pullback to an area inside of favorable large triggers. So your job is to do this. Go circle those tails. Take that picture and say, I have strong triggers. I have a clear path. I had a pullback to an area, hold on, inside of triggers. And the magical thing, guys, is that if you can say yes to each of those items, you have a trade. You have the potential to make money. You have a high probability trend trade that gives you the opportunity, maybe not to hit a home run, but to at least get some money in the bank. And look at this, 1, 2, 3 divergences in the same price range. Look how the market reacted after this termination condition that I discuss every day in the room. So when you learn to read your indicators, you learn to trust these entries, and you learn to get the hell out of the market when your advantage is gone. Let's look at the next one. Odds favorable momentum, potential to break. Let's see what it looked like on a smaller, faster chart. Guys, this is the easiest way to build confidence. No divergence, strong triggers, a couple ticks below the mid band, and it continues down to the next fib. That's a little low. You may or may not have gotten into that trade. I'm not sure. Let's back up and look at the next circle. And I know this one worked because I took it live. Could have gotten in here, but I missed it. I was annotating a chart for you guys. Market pushes down, all the potential to break, pulls right back to resistance inside of triggers. I missed my entry. I got it on the second bar. That's why I'm a little low. I get paid, and I get out at trouble. So that's how you're going to study. Potential to break, odds favorable momentum, areas inside of triggers. Does everybody see it? What do you think? They might get us, they might not. Does everybody see the momentum? This is live right in front of you. Smalls are through the area, large are not. It has the potential to break. This is my lowest area of resistance inside of the retracement zone. They just got me. My initial stop will go where the market should not, beyond those triggers. At this point, ladies and gentlemen, I am powerless. I have done everything that I can do. I've recognized the advantages. I've taken the proper entry. And now I'm just hoping that the sellers have it in them to push this market down to my profit targets. Pretty cool, right? Everything we just talked about. There's $100. I'm going to cover, go break even on the trade. They can come get me if they want, or they can go to my second target. I don't care. I just made $100. It's in the bank. They can't take that from me. Guys, this is what we've just talked about for the last hour. I just did it live in front of you. Pretty cool, right? So how do you get there? How do you develop that trust? How do you get to the point to where your chart read takes 2 to 3 seconds and you have the confidence to take the trade? Well, here we go. Oh, they got me break even. Darn it, I only made $100. Pretty awesome, right? To see it live. That's how quickly your chart reads will happen when you become a chart reader. So I'm going to give you some stuff. And I'm gonna stress right here. This is where I get in the pulpit. You guys have seen this before. 99% of you will ignore this. 99% of you won't do this. 99% of you will decide that it's easier for you to learn to become a day trader by taking crappy trades. I'm going to tell you right now, it's not. So, a little bit of trust. You really want to get there? You really want to read charts fast, guys? Go snap pictures. Go take pictures. Take a lot of pictures. And start with this. This is Chart Reading 101. The goal, my goal, your goal, our goal collectively is that you look at the large chart and gauge those first two advantages. Be ready, be able to recognize momentum and path. Because when you say to yourself, I have momentum and my path is clear, you're going to find 1,000 creative ways to get paid. When you say to yourself, I don't have momentum, my path isn't clear, you're going to learn to sit on your butt and do nothing. So take 25 pictures each, strong triggers and weak triggers, so that you know the difference between the two. Take pictures of clear paths, take pictures of termination conditions, so you know the difference between the two. Take those pictures and drop them into your spreadsheet. Guys, I have given you the greatest head start ever. Strong triggers is always strong triggers. But don't just take the picture, guys. Annotate. Why is it strong triggers? It's strong triggers because they're wide, they're open, the smalls are above the large. Rule number 1 met. Create a correlation between what your eyes see and what your brain thinks. And what happens is you see this in the fraction of a second. Look at those tails with all that momentum and clear path. Giddy up to the promised land. But then you're going to say these are weak triggers. The smalls are inside of the large. Anything can happen. Rule number 1's not met. And look, there's a retracement. And the cool thing is if you're going back historically and taking these pictures, you're going to notice some stuff. Without the advantage of momentum, that market doesn't always push in the direction of the trend. Without the advantage of momentum, those damn key areas tend to hold. But when it's strong and there's nothing in the way, egads and little fishes, that market tends to go to the next key area. So not only are you learning to recognize the difference between strong and weak triggers, clear path and termination, you're also looking at what the market did with that strength and what it did with that weakness. And guys, I'm telling you right now, everybody ignores this, but if you take the time to do it, it'll take you 2, 3, 4 hours. But you are going to be an amazing chart reader, and you're going to really embrace those advantages. And as you take those pictures, here they are in a high probability trend trade checklist. I love checklists, guys. In a previous life, I worked in the restaurant industry. I was working for a Tex-Mex restaurant in Texas, in Austin, in Dallas, in Houston. And my job was to build managers. My job was to create these Terminator managers that were so good at what they're doing. Systems and routines was my specialty. And they would fly people in from all over the country to come train with me. Kind of flattering, right? So I gave everybody a checklist. And these managers were brilliant with these checklists until they thought they were too smart to follow the checklist. So I'm a big fan of a trading checklist. This is going to tell you exactly what you need to have an edge. The first thing on your high probability trend trade checklist, and guys, this is the best of the best, highest probability way you can ever take it, is the market coming from a strong top or bottom? We have not addressed this yet. What we have addressed is terminations. Price reaches an area, absolutely no triggers break through. Guys, if that termination reverses the market, large triggers go from green to red or red to green, we call this a strong top or a strong bottom. It means that the decisions made, whether it was the buyers giving up their fight, whether it was the sellers taking over, the decisions made at a termination were so freaking impactful that they reversed the market and gave you your rules met for a high probability trend trade. That is the best of the best trades you could ever take. It's not a rule. It's just an advantage that you can see, that you can recognize, that'll make you feel good. It does become a rule for almost every trade outside of the high probability trend trade. So as you're taking your pictures, use this one to make sure you're taking the correct pictures. Is there separation? Do the colors match? Do I actually have strong triggers? Have the scissors closed? Are the small inside? Is it actually weakness? Know the difference between the two. One is an advantage and one's the kiss of death. Not really, but you're going to feel that way as a brand new user. When you're looking to define a clear path, this is the only clear path. Number 3, smalls and large are below support, above resistance. All the triggers are through. The path is clear. It remains clear until you have that next area reached. So even if we go back to the picture that I pulled out of the spreadsheet, you could go through and you could say, okay, small and large above, there's my clear path. That path remained clear until I reached those 1-to-1s. There's a couple tails. How much money could I make in that area? And that's going to start creating trust in the idea that you don't have to trade into areas, that you don't have to trade without momentum, that you don't have to hope the market does something. You can simply react to what the market is doing. Is it a termination condition? Don't take the trade. Wait for the reaction. That's what the plan says. And then, is it only the potential to break? And guys, I included this into this high probability trend trade checklist because if it's only the potential, it is not high probability because you don't have a clear path. But this is going to be that second trade given in the plan that I'm about to hand you. And you can take these trades and you can manage them assertively and you can take quick profits and you can get to break even quickly. If I'm not mistaken, that's exactly what we just did over here is we got to break even quickly. We kept our profits, and that's pretty good stuff. And then it goes through and it defines your entries, guys, from the point of the reversal bar all the way to where your limit order goes. This checklist is your roadmap initially. The second page, guys, this is for you to print out to put on your desktop. Nobody in the history of this checklist has been able to mark yes truthfully. Truthfully, that's the key, and not do better than 70%. This is great for you to print out, to put on your desktop, to police yourself. More importantly, if you get in the habit of writing these rules on the chart, every trade you take, win, lose, or draw, every trade you take, if you write these rules on the chart, I'm going to show you something pretty cool in the client trades. I'm the one that loads this spreadsheet, and I want you to see this. This was the perfect high probability trend trade. This was odds favorable momentum. This was the potential to break. This was the perfect entry. Ladies and gentlemen, Better Dad lost this trade. And I think a lot of people in the room took this trade and lost this trade. And he began second guessing himself. Maybe this wasn't right. Maybe that wasn't right. I want you guys to remember that anything that wins 70 to 80% of the time, and this is repeatable and verifiable that it does, is obligated to lose 20 to 30% of the time. Losses are a normal part of a positive equity curve. Make sure you're taking the correct losses. One of the other things you can do, and guys, I know I'm a pain in your ass telling you to study, is you can go back every day and retrade the day on market replay. You can go back. You can fix mistakes, you can manage differently, you can test theories, but if you go back with market replay and you have this checklist in front of you, market replay has a pause button. It literally will allow you to stop what appears to be a live market, make sure your advantages are actually in place before you enter the market. Guys, if you do that, if you take that time, you're going to trust this. You're going to see the potential of the market. You're going to see the potential of following a plan. And I can't stress that enough. Print this out. I think that the biggest challenge that 90% of the people I work with have is they refuse to put the effort in to really trust the methodology. 90% of the people I work with won't take pictures outside of trades. 90% of the people I work with refuse to use the spreadsheet. They won't go circle tails. They won't build the trust. And guys, I know this because I'm part of the 90%. I did the same thing when I started with the software. I'm going to give you a plan right now. And this is a stepping stone. This is your first trade. This is not your only trade. Guys, this is the beginning. I'll show you. Ninja Trader, Jared. When we talk about market replay, let me go to, is it still in here? Market replay routine. And here's the video. Here's the instructions. If you remind me at the end of the classroom, I'm happy to go through and open up market replay. It requires that I kill all my data in my workspaces, so I don't do it in the first part of the day. But at the end of the day, Jared, if you remind me, hey, Mark, let's go through market replay. I want to up my reps. I want to get more repetition. We'll do that at the end of the day. But there's the instructions if you're feeling like you want to knock it out on your own. It's not difficult. What I did is I took this video and I had it on one monitor and I had my Ninja Trader on the other monitor. And I would just pause the video and go through it. But I'll do it for you guys this afternoon. I'm glad to, because I want you to practice. Um, Guys, this KISS plan, this is your first plan. This is your base plan. This is your foundation plan. Awesome. You're welcome, man. You're welcome. I'm telling you guys, there's not much that can't be fixed. The more you participate, the more you practice, the more you study, the easier this gets. If you are trying to become a professional day trader by taking trades, you're doing it wrong. Trust me on this one. I've done it. I'll tell you my story at the end of this. Guys, this is designed to optimize your chances of success with a high probability trend trade. This is the best way we could figure out to take this trade. It's going to be through simulation, study, class feedback, and continuous practice. This is the magic line right here, guys. You'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. When you understand momentum and path, there's a lot of opportunity. When you understand where the market shouldn't go, management becomes easier, guys. So build this foundation with the first trade. Get good at the first trade, understanding that there's so much more opportunity for you beyond it. So there's two things you have to know before you enter the trade. And you're not on sim. Guys, when you're on sim, you're going to break stuff. It's okay. Break it. Put it in the room. Let's talk about it. I need to know why I'll enter a trade. Well, the only reason for me to enter a trade is because my rules are met. Because my rules have been proven to win more than they lose. I learned them individually so that I could recognize them in the moment. I studied the looks on the people's trades from the spreadsheet, right? What else can you do? Let me find another picture. I went back and I circled tails. Guys, your workspaces go back 10 days. 10 days worth of tails with rules met that you can circle and build confidence and know your pattern and know that this wins more than it loses, guys. So the only reason I'll enter a trade is because my rules are met. I have to know what it looks like to have that. It's describing a pattern. The pattern has been proven to win more than it loses. That pulls a lot of the emotion out of taking the entry, but even more so if you honestly do the study. Nobody in this room could ever do that study and not see losers. And losers happen, guys. And losers are a normal part of a positive equity curve. And when you know that the trade will either win or lose, but you don't know which one it's going to be, it pulls a lot of the emotion out. You're going to know where they have to come get you to produce a loser, but you won't know. You'll never know what the result's going to be. You're not in control. And once you accept that, trading becomes much easier. You also have to know why you're going to exit. This is management. Exits are either taken at profit targets. Maybe it's that fib that was off in the distance. Maybe it's an arbitrary number, like I'm going to give you in the KISS plan, or when the advantages go away that got you in. So if I'm in a trade and my only advantage for the trade is momentum, maybe I just jumped into the market. Well, when that momentum goes away, that's an awesome opportunity for me to get out of that trade. If I enter a high probability trend trade and 3 divergences print, that's an awesome opportunity for me to manage out of a trade. So when you define your entry, you know the advantages it took to get in, which means you're going to understand when they go away. So defining entry is the first step to great management, guys. Defining entry, taking the right entry, is the first step in management. And it's the core for the management plan that I give you in the KISS plan. This plan is a byproduct of my fear. It really is. When I started trading, I didn't take pictures, I didn't participate, I didn't simulate, I didn't write rules, I didn't know what it looked like. And guys, I got my butt kicked to the tune of $5 grand in about 2 hours. It took me about 2 hours to lose $5,000 in the market. And I had no idea why I'd done anything. So I went back and I studied. And I did everything that I asked you guys to do. I started taking pictures. I started participating in class. I filled out my spreadsheet 4 times over before I went live again. And what I realized is that I was amazing at defining entries after all that study and the time getting into it. But I was beat up. I was abused. I was scared when I got into these great entries. And guys, I spent literally a month taking one tick on every trade because I was afraid to hold. And it was sad because I was down money on commissions even though I was taking the perfect entries. So the management plan that I created for the KISS plan is designed to help you overcome some fears because it's very, very mechanical, the same way your entry is. It's very, very emotionless. It's 100% if then. It's based on two contracts because we're going to have one contract to learn how to get paid, and we're going to have one contract to learn how to trust the large chart. So two contracts. It is going to go over stop placement using that phrase where the market should not go. And guys, this plan is designed to get you paid because payment is success and success is confidence. And then there's the disclaimer again. You will create a plan, guys. You will grow outside of this once you learn to read your indicators. Because the more time you spend learning to read indicators, the quicker your reaction time is. So we're going to go through this KISS management plan. I want you to see exactly what it looks like. It's if then. That's it. If then. It's a flow chart. If my entry is 2 ticks below resistance, then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market shouldn't go. If this is going to be one of my 70% winners, ladies and gentlemen, the market should not push up to 71.49. That is where my advantage is gone. That is where my edge is no longer present. That is where I choose to exit this trade with a loss, dust off, tape up, pull up by the bootstraps and say, all right, I'll wait for the next one. You're going to know your risk before you ever enter the market, guys. You've got to learn to be okay with risk. You've got to learn to be okay with the idea that you're going to see a market go against you a little bit. But as long as it's still in the retracement zone, as long as it's still in that areas that are likely to create a bounce, you still have your edge. Don't exit where entries come from. Targets are $100 and $200. Keep them there. Cement them in place. If you don't get stopped out, it means you're getting a reversal bar. It means the market's going down. What a reversal bar is the first down after the up bars that got to your entry. This reversal bar, you're going to hear it called a confirmation bar a lot. Because when you have momentum, when you have path, when you define your entry, this bar is confirming that the trade has begun to work and do everything you hoped it would. You're going to redefine where the market shouldn't go, and you're going to put your stop 2 ticks above that. You now have $30 of risk per contract in this trade because of the confirmation, because of the redefining where the market shouldn't go. This reduced risk doesn't guarantee a winner, but what it does is it guarantees a tiny little loser, which really doesn't hurt too terribly bad. If it doesn't hit your stop, it means that it's going to the first target, guys. This is where life gets good. And if price reaches your first target, one contract is all automatically removed and those funds go into your account. So with one contract remaining, you're going to move your stop to break even. So that $100, this is $100 per contract. You're up $200 in the trade right here, but you're removing one. You're putting 100 of that in the bank and you're putting your stop to break even. You're taking all of the risk off of this trade so that you can have the courage to hold for the second target. And the reason we're looking for the second target is because the large chart says that you have momentum. The large chart says there's nothing in the way, and you're learning to trust the large chart advantages. If it goes to your second target, remember it's only $200 away from your entry. That's a $300 trade. That is one contract off at $100, one contract off at $200. That is $300 in your account, and you're going to exit the trade. No matter what happens next, you're done. You're out. That's it. Breathe. Unpucker. And the cool thing is that this is a $300 trade. This isn't a $300 day, guys. This is a $300 trade. That's 2 to 3 minutes of your life. But here's the part that I want you to get. That $300, if that's the best you do every day, is a $75,000 year. Add $100 to it. It's a 6-figure year. And the goal, guys, isn't to make all the money. It's to make the money consistently. When you can hit profits consistently every day, and start small, right? I'm learning to do this. I'm going to hit $200 every day. chances are you're not paying your bills with your trading right now anyway. Guys, that's $1,000 a week. That's $4,000 a month at only $200 a day. Learn how to get paid, because once getting paid becomes easy, you're going to ramp up. You're going to add contracts. You're going to use copiers. The goal is to learn how to get paid and how to get paid every day. And then once you can do that, it becomes effortless. Most people in this room tell me that $200 a day is absolutely no problem. I can do it without hesitation, but they're not doing it every day. So what's holding you back? Is it trust? Is it study? Is it time in the market? Is it following rules? Do a little self-reflection. So KISS plan is the best of the best. Can you guys hear me? Give me a Y if you can hear me, please. I like to mute Ron every now and then. No. Sound? Okay, it's me. Did that help? Can you guys hear me now? No? Okay. I'm going to reboot real quick. One second, guys. I'm trying to get back to the room here. Can you hear me now? Are we good? Am I back? Guys, did that help? Am I back? I'm talking. No, I'm not. Son of a gun. All right, so I'm talking. So we'll knock you out. Please rejoin. Oh, Ron, you can hear me? We're good now? Oh, all right. The threat of getting out. Okay, that wasn't me. That was Discord, guys. Awesome. Whew. I hate it when I have to kill the room because that's never a good thing. So, guys, the KISS plan is the foundation, guys. The KISS plan isn't the only one. No picture. Let me reboot that one for you. There we go. How's that? That come back? I love technical difficulties. Not yet. Still no sound. Anna, still black. It's definitely Discord. Okay. Joel's good. You're all good there. Guys, you may need to reboot your Discord. And let's see if that works. So, UK is good. Across the pond working. I love it. Hearing, looking at nighttime. So let me kill mine again. And then let me pull it back up. And let me go to my screens. Ron, did that help? I just did the reboot on it. It's showing clear on mine. It's showing that I'm showing on mine. So if you can hear me but you can't see me, guys, try rolling out of yours. Because a lot of you guys can see me, right? That means my camera's working. If you can see, it means that my camera's working, which means that it's probably on your end, which I know is a pain in the butt. Ron, I believe you. I believe you. We have trust, but you may need to reboot yours. Because if some can see me and some can't, it means that mine is working. And if some can hear me, hold on. Hear me. And some can't. My stuff is working. There we go. So if you can't, try the reboot. There we go. It's just technical, right? Time to feed the chili dog. There you go. So I promised you guys everything that you need to be successful with the software. I'm about to drop a zip file in the room, guys. And the zip file is called All You Need. Inside the zip file is Chart Reading 101. It is the High Probability Trend Trade Checklist. It is the PowerPoint that I use to teach every day. Inside of there is the KISS plan. And in that KISS plan is not only the first trade, but also the second trade, the potential to break trade. And there's even more goodies in there for you guys. Inside, you're going to see this. This is called the pictures you can take. Because I'm telling you, the people that take and post the most pictures get to where they want to be the fastest. Take pictures pre-trade so that you can go back and study it and see if you were missing something. Take pictures during the trade as you work on management. Take pictures after the trade. This is where you're going to put your rules on there, circle your entries, exits. And then this one is real important. Awesome, Anna. No trade. Take the pictures of the no trade. Guys, why did I not get into the market when it almost looked like an entry? Because what happens is you're going to learn some pretty cool stuff if you do that. If you take no trade pictures, you're going to be able to see some stuff. And you're going to be able to talk about some stuff. And let me see if I can find one that has a good example of it. All right, I'm going to go find the right picture. It's back. Awesome. That makes me happy. I want to talk about the no trade pictures too, guys, because one of the things that I realized about myself when I was learning the software is that I would talk myself out of taking a trade because I didn't want to lose. And I want to show you what I mean. If I had this set up as a brand new user, or someone who's learning the software, I might say, and this is a page right out of my book, guys. I might say, well, there's a termination condition right there. Absolutely no trade. And then if I keep that to myself, I'm patting myself on the back, wondering why the hell I can't find a trade, but yay me, I'm following rules. If I post this in the room and say this kept me out of the market, what it does is it opens the door for whoever's running the room, happens to be me, to remind you that termination conditions are defined on the large chart. That a bar or that a line or a one-to-one or something on a small chart, that's the bouncy thing that I need on that little chart to get me back to my entry. So a no trade picture defining a termination on the small chart that isn't three divergences, that just opened the door for you to have more opportunity in the market. Another one, well, my small triggers turned against me. The colors didn't match. I didn't have momentum. And again, what that does is that opens the door. But Mark, momentum is defined on the large chart through the triggers, not on a small chart. And that little loss of momentum was everything you needed to get back to the perfect entry. Sometimes it's no trade. They didn't hit my limit order. My limit order was right here at the bottom of the triggers. I've done that one too because I was so scared of risk. And then it opens the door for the lesson on the entry. So guys, take advantage of not only being able to take pictures and looking at everything, but being able to get feedback on what it is that you see, what you think, what you feel. Because what you'll find very often is our self-protection, what is it, self-preservation skills will keep us out of the perfect trade and we'll convince ourselves that something's wrong. I don't have any stake in the game when you guys post a trade. When you post something in this room, guys, I don't get nervous. I don't get anxious. Nothing affects me. The only thing that I look at is, did you have momentum? Absolutely. Did you have a clear path? 100%. Jen, did you have an area inside of triggers? Absolutely not. No areas inside of favorable are triggers. Entered at the midband, stopped out. So exactly. So if Jen didn't write that, that's our conversation. And then when everything rolls and you get momentum and path, she makes it back. Nicely done, Jen. But this is why feedback is so important, guys. Jen, I don't get shaky at all looking at your entry. My palms don't sweat. I don't get butterflies in my stomach. I have a very objective view here. It's 100%. Are the rules met? Are the rules not met? And I just go back to the rules and I can say without question, the rules work, no rules did not. I love this, Jen. I love your annotations. But I can say, okay, let's look at rule number 3. Once you get to the wrong side of the triggers, you don't know if, when, or where that market's going to bounce up. And this is a great example of it. Even with momentum and path, once the edge is gone from rule number 3, it creates some challenges. And Jen, this is an awesome, perfectly annotated chart, and it's a mistake, right? And you know that that was a mistake, and you went back and you self-policed. And because you took the time to write that down, because you took the time to remind yourself that your rules are effective and breaking them doesn't work as often, you are going to be less inclined to break your rules. And guys, you're not going to learn to not break your rules from one bad trade. If I am any shining example of it, it takes about 2,000. So you're going through this process of trying to be a little bit better every day. You're going through the process of trying to see things a little more clearly every day, trying to catch that move a little more effectively each and every day. So the second half of my class, and guys, I drug out the first half on purpose because I really wanted to stress that it's the study you put into this that's going to pay dividends. As we get into the second half of class, we're going to do chart reading. That's it. Everything that you guys posted in the room, I'm going to look at. But I want to remind you guys this, and I wrote this, and true story, this is a response to an email that I got from somebody that was mad that he wasn't making money in the first couple weeks, and he was mad that people in the room were taking trades that were not high probability trend trades. He was livid that I was saying, hey, nice trade, when the rules weren't met. Guys, everybody's at a different point. The key to everything that you do with the software is having that foundation, understanding the basics, and then each day, each week, you grow a little bit. You get a little better. You see things a little more clearly. The market seems to slow down. So for you brand new users, I blanket you with very conservative rules, recognition of advantages. We stress recognition of advantages. And I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. So for you brand new users, and this is where a lot of us find ourselves, all termination conditions are bad. No momentum is bad. Areas beyond the triggers are bad. And guys, these are blanket rules because they increase the likelihood of success. If you are a brand new user, and Jen, I apologize, I always seem to pull your charts up as examples. If you're a brand new user and you see momentum and path and this loses, you think the software sucks because you just took a loser, right? No areas inside of triggers. It's a blanket rule because it increases the likelihood that you don't get run over and upset. You will find ways. You will find ways when you're a chart reader to be a little more creative, to make money differently. True story. These things aren't always bad. You just don't have the experience to know when. So the more time you spend with it, the more that you see. And guys, this is the most important phrase I could ever give you. You have to learn the process that yields the results. There's a pattern that produces an edge. There is a series of events that happens that puts you in the market with the highest chance of success. Learn the process. Focus on the process. Learn to get good at entering the high probability trend trade. And then the results seem to follow when you focus more on the process than the results. That's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, but only the best trades, you can find an extraordinary level of success. But that goes two ways. One, you think that it's limiting you, and I'm not getting all the movement in the market, and I'm not making money. But the biggest challenge people have with the KISS plan is that they're not actually following it. They're believing that they're being conservative. They're believing that they're following rules, but they're never posting in the room to make sure that they are. I had a gentleman call me once, mad as hell, told me I was full of crap and the KISS plan was bogus. And he showed me 5 trades to prove that it was bogus. And it turns out that he broke rules on all 5 trades and lost all 5 trades. So what we did is we went through and we started looking at his charts and we started talking about his charts and we started looking at the advantages and we cleared up every misconception that he had about the rules. And then he went back and he traded the KISS plan and he was at about 83%. And I believe that gentleman is still trading professionally today. So learn the process, question everything, guys, but give yourself a little grace. You're brand new. Some people just aren't good kissers. At least that's what I've heard. I don't know what that means. Oh man, the meds are gone. So guys, as we get into the second half, don't be the trade police. Don't tell Ron that he's doing it wrong. Don't tell Paul that he took the wrong entry. Don't tell Peter. That's not momentum. Focus on you. Work on you. Be good with what you're doing and understand that for 30 years, Nexgen has been teaching people to read indicators and day trade. And there are still people with me 10, 15, 20 years. If you learn the basics, guys, and most importantly, if you participate in class, thank you for saying that, Jen. If you hide trades, you won't grow. If you show me the losers, guys, we'll learn how to fix them together. True story. It doesn't have to be difficult. Trading doesn't have to be difficult and stressful. You just have to be willing to say, I have momentum. This is only the potential to break. What's it going to take to get an entry? And I want to throw out there one more thing, and then I'm going to take a break because I'm super hydrated. You will make mistakes. You will make mistakes. And if you're a week in or 2 weeks in, guys, you are an infant. You are in kindergarten. You are still taking naps and eating paste every day because everything is brand new. Eventually, it doesn't feel so new and it gets easier. It really does. Ask anybody in the room. I'm going to walk away for a second. When I come back, we're going to look at charts. Open invitation. You guys that are working with TradingView, drop them in. Let's talk about them. But I'm going to keep it mostly NinjaTrader until you guys tell me that you want to talk about something else. Weak triggers, not a clear path. Does everybody see it? That's how quickly it happens. There's no reason to look at a small chart because the large chart isn't giving me either of the first 2 advantages. Strong triggers, no clear path. The large chart is not giving me my advantages. Why would I trade into Fibonacci support when all of my triggers are above it? That's hope, ladies and gentlemen. And hope is a horrible trading plan. I'll see you in 5 minutes. Go stretch your legs. I'm just typing in. Um, I even put not talking, guys. Gee whiz. Can you hear me now, though? I should be unmuted. Guys, how many times do you have to see the market hit a termination condition and bounce before you believe that it takes away your advantage? For most of us, it's about 27,000, I think, is a rough estimate. And then this is one of the things that's hard, is you're like, everything is up. I know it's going up. And you get three divergences, and your areas are on the wrong side of triggers. And then it goes up anyway. And you say, I knew it was going to go up. I knew that market was going to go up. And you didn't, guys. You hoped it would go up. Your indicator said that it might. But over here, it told you that it could just as easily retrace down. It could retrace down to there, and who knows where. And your advantage is gone. And one of the most dangerous things for new users is going back to study and not saying, were my rules met, but saying, look what happened. I need to break my rules to make money. Guys, you don't. So when you do your historical study, go back and talk about whether or not your rules were met, not what you thought was going to happen or not what you saw happen. I love it when people bring me posts in the room where they didn't actually take a trade and they're like, yeah, I went short right here and I held through all of this and then I exited right here because of divergence. And no, you didn't, because divergence wasn't even true from up here. And why would you sit through all of this? And what's going on in your mind, right? Or, yeah, I got in right at the blue fib to the tick, and then I got out at the red fib to the tick, and I added on right here because stuff was green. And I knew to exit right here because of divergence. And guys, you don't. So when you go back and do your historical study, your question is, were my rules met? Were my rules met? And focus on those rules, guys, and really build that foundation. All right, let's see where we're at. Let's do some chart reading. Now, I'm going to focus on you guys for a while. I'm done talking. It's your turn. All right, so Paul, and you got a lot going on these charts, brother. Odds favorable, potential to break. You got in. I don't know what got you out. What spooked you out of that trade? You were in, and you got out for 2 ticks. And that's the one thing that I'm not sure. I'm not sure what got you out because you said that it said to hold, right? 21.3 said hold through pullbacks, but you didn't. So I'm curious what got you out. And then it pulls right back to support. Every indicator is up. Range chart said giddy up. And then you go counter trend trade. And I posted these in the room, and that's okay. Guys, if you're going to fight direction, if you're going to fight triggers up, getting through areas, large triggers up and strong, if you're going to go against everything the large chart says, this range chart will show you change. It'll at least give you a fighting chance. He had the termination condition, but every indicator still says up when you went short. Every indicator is still green and pointing north. It's okay, Paul. You don't have to. But let me say this. If everything on every chart is going up, going down isn't going to work that often. Not seeing the picture, Bob? Can you guys see the picture? I don't know. This has got to be a Discord issue. All right. I just did a reboot on it again. Let's see if that works and helps. Discord's got to be doing something. Some of you can, some of you can't. Now I just tried to do it and it's not showing it on my end either. So let me try again. There we go. Now it's showing on my end. Are we good there? I did a reboot, reloaded it. All right, cool. So if I am adamant that resistance has to hold for me, guys, there's a huge patience piece that is going to change the whole direction of your trading. And I'm going to share this picture with you real quick. And this is a picture that I labeled might versus has. And there's this, I think this is a good lesson for everybody because we're all tempted to go counter trend because we love Fibonacci. This price right here is that red fib, and every indicator is up. And if I go long right at that red fib, I probably get stopped out. And if I go long again with everything green, I probably get stopped out. Once everything rolls from that high, guys, remember that there's fights in the market. And they typically fight at that range. Your trigger lines tell you. Your trigger lines tell you, hey, look, now we're going down. Now you have momentum. Everything is perfect. And guys, this price where you hope it holds is very often this price where it's actually held. Very often, not always. So let your trigger lines on a smaller, faster chart tell you that it's time to go that direction. And you'll be really happy with how that patience comes into play and how it helps out a lot. Good stuff, Paul. Good stuff. All right, let me see. What's next? I know we had at least 2 from you. At least. And this was the one, guys, rule number 2 is going to define a range. It will. And your large chart is up with strength. So there's the recurring theme. Large chart is up with strength. Range chart is up. The intermediate large chart, I guess we'll call it, is in a downtrend, but you don't have momentum. And there are 1, 2, 3, 4 termination conditions below you. 4 Fibonacci areas with triggers above them. You are void of momentum, void of a clear path, and you decided to go short. What happened is you got caught in a range. There are no less than 8 termination conditions in this range, and you took the short. And it's great patience waiting for that chart to roll, but trading without momentum into areas with the potential to break, again, is probably going to work less. And this is probably a patience piece. This is, I'm sick of waiting. I'm going to try the short. Been there, done that. Cav. Let me figure out where you did this. 8:30. 8:30. So we're all the way over here. 8:40. This trade, nope. This trade happened right about here. Price pivots at magenta 1-to-1s. Divergence forms. Place a limit order at the triggers. Place my stop 2 ticks above the red fib. All right, so everything's set up and you went short. I'm glad it worked. So guys, I'm going to go back to once the trigger's rolled and everything says down, that's a much bigger short than your 4 or 5 ticks fighting everything. There's an easy path and there's a difficult path. I read my indicators, Aaron. I can't predict divergence. So divergence takes 2.5 bars to form. I can see its potential. I can't predict it. I can't predict that a market's going to consolidate. What I can do is I can see a market that has consolidated and choose not to. So, Aaron, 2 things. You ready? The first thing, your losses in CHOP are not finding their way into my lap. You're giving me 0 opportunity to help fix what's wrong. Well, yeah, every day. Why wouldn't you? You've got a coach. You've got someone that wants to give you all the feedback. So what happens, Aaron, is you might be trading in determination conditions. You might be trading without momentum. You might be trading from the wrong side of the triggers. It could be the easiest freaking fix in the world, but I have no idea what you're doing. I have no idea why you're taking losses. Give me that opportunity to help. You don't have to predict anything. That's the wonderful thing about what we do. No prediction necessary. You wait for a couple advantages and you pull the trigger. All right. So Paul, I love this. I love this. Paul said, wait a minute. I'm done fighting. That was almost, okay. Did that link work? Nope. So almost the link, Aaron. Give me a second. I'll show you how to post in the room. All right, Paul, are you ready to high five a little bit? I love this. Here, you said, let me fight everything. Let me puff my chest out. Let me be a badass. Let me be the first one in, right? And then you said, well, that's just silly. Let me go with momentum and path. And look at how effortless. Look at how easy that trade was. Guys, we all go through this. Look at how easy that trade is. Trading away from Fibonacci with momentum, getting out at Fibonacci. Just effortless, Paul. It was so easy. And this is what I'm saying. If you go back tomorrow, Paul, and you say to yourself, all right, I had all the momentum and path. I should have held that one. You're going to be more inclined to hold with momentum and path. If you say, all right, everything's set up and I fought it and lost, everything said, I didn't have a clear path. I fought and lost. Everything set up and there was nothing in the way and it was easy. What happens is you're going to start to believe that there's an easy way and a hard way, that there's a high probability way and there's a low probability way. And you'll start to lean towards the easy path. But you got to go back and look at it, right? You got to go back and study it. You got to ask yourself, which one do I want to take every day? Do I want to take the freight train in the direction of the path, or do I want to be the first one in? Yeah, you figured you could force that. I've done that. Have zero influence. Aaron, are you on Snagit or are you on Capture software? Because I think you copied that. Where did you copy that link from? Did you copy it from like a spreadsheet? Did you like go in and say copy? Okay, so that's why. So what happens is if you just copy from the spreadsheet, it gives us that. But if you right click on it and copy link, where's it at? There should be a copy link. There isn't a copy link. So what you can do is, if it's from your spreadsheet, you can open it real quick and copy it from the bar there. And then when I put it in, I get the actual picture. There we go. Perfect. So when you do this, every trade that you took, make sure that I can see the large chart and make sure that I can see the entry on the small chart. And then, so if you want to go back and grab a picture, what are these circles for? You're welcome, Paul. Are these your circles or my circles? Okay. So watch this. Are you ready? Instant fix. This is why we post in the room. So you're circling tails, right? That's cool. But Aaron, the most important part about circling tails, I love that you did this. This is amazing because how many people do this? When I'm going back and I'm circling tails, let's just do it in a live market. What I'm doing is I'm not circling every tail. When the market is up, when I'm getting momentum, and I see one of these tails kind of hanging in the middle of the move, this tail is that potential pullback. Does that make sense? So rule number 3 says buy or sell a pullback. So if I circle this tail, that's not a pullback. That's actually at the top of the move up here. So in an uptrend, you want to circle the tails that are low because we buy low. And then in a downtrend, and there's a good example right there. So if I were doing my study, I would say, okay, I have odds favorable momentum. I haven't reached resistance yet. That's my circle. That's my tail to circle. Because when I go back to the smaller, faster chart and I look at that tail, it is right at support, right at the bottom of those triggers. And that's how you develop that trust. And then open it back up. Let's see if we can find a short trade. That one's into a termination condition. I'm not going to circle it. There we go. We'll just use this one right here. And I think this is all the way back to yesterday. So because there's momentum and nothing in the way here, Aaron, I'm going to circle the tail on the upside because we buy high, or we sell high, and we buy low. So if I scroll back and find that one, what was that, 1117? There we go right there. So you can see that the tail is the pullback. So pretty cool. The first picture that I get from you in the room today gives me the ability. This one, I like it. Let's take a look at it. Everything's going up, buy low. Everything's going up, buy low. And then these are the ones that we can omit from the study process. Does that make sense? And I promise you guys, once I see what you're thinking, I can help you get it in place if you need to a little bit. But we do this a lot. I do this a lot. I learn something and then I embrace my truth. My truth is that I know I'm supposed to circle tails. Well, there's a tail, and dang it, it doesn't work. Well, because I'm studying wrong. And Aaron, I love it. What an easy fix, dude. So keep doing that. And that was pretty painless, right? I hope that was painless. Hey, Javier, nice to see you. Guys, I don't ever try to beat you up. What I really try to do is nudge you in the right direction so that you can have the highest chance of success. That's all I do. That's my goal each and every day. I don't want to be the police. I would be exhausted at the end of every day if I tried to get upset about mistakes. Guys, I make mistakes every day. All right, Wayne, let's see what you did, brother. Wayne, you are so busy. Wayne, your charts are getting more and more difficult to read every day. True story. You say white bar trade, but I don't see any termination conditions. That's from over here in the middle of nowhere. So rule number one for a white bar trade, Wayne, is a termination condition on the large chart. So you don't have it. It looks like you got in and got out. That's great. Here everything says down and you went long and got stopped out. Wayne, these are really hard to read, brother. These are really hard to read. Stop should have been 3 ticks below tail. Or maybe you shouldn't have gone long when everything says down. I don't know. I'm not sure why. Trading directly into a termination, 737, 737. There's your long trade right there, it looks like. And that is every indicator odds favorable, momentum down. And that's where you got stopped out. And then you go short and you made money with it. And then you fight everything and you make a little bit of money. And then at least here you have a termination and it's heading the other direction. And that one was a little bit easier. I'm just going to look at your large charts. 823, 823. Odds favorable, clear path. You get in on the way up. Pretty easy. Comes back, gives you a second trend trade. And the second trend trade looks like it was pretty easy too. First one, easy peasy, make some money. Didn't catch the second one. Never went below where the market shouldn't go. And off it goes off for the win. Good stuff, Wayne. Jared, do you buy on the same candle for lack of a better word, or do you wait? Oh, great question. Let me show you exactly what we do with these. And this is something you guys can do too. So what I want to know first is, do you see da, 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 on the large chart, do you see the odds favorable momentum, the separation between the two? Guys, everybody play along. This is going to be a great one for you as we define entries. Because first we have to define the advantages here, right? So separation, that's strength. I love it. Do you see how the top of the bar has not reached Fibonacci resistance yet? And all of my triggers are above the previous. Guys, this is odds favorable momentum and a clear path. This is the perfect look. Are you with me so far, Jared? Guys, this is the core. This is the one that I want you to study first. I want you to be able to recognize this. This is what it looks like when it's time to take a trade. So when this is going on, this is what the small chart looks like. And it is absolutely railing north. And this is where I'm just going to go through the process of defining entry. So everything's good here. And this market, and I'm going to go like this. This market is going up without Jared, and it's going up without KJS, and it's going up without Risky Meister, and it's going up without Morgan, and up without Miel, and up without T45, and up without Steve, and up without everybody. And then I get a reversal bar, and I'm like, whew, there's still a chance to get paid. Guys, the reversal bar starts the pullback. The reversal bar says, okay, the fight is on. Here comes your entry. See the down bar, everybody? Nothing's changed on the large chart. It is still odds favorable. It is still clear path. And then I'm going to say the reversal bar is there. Where's this retracement most likely to go? What the heck? I don't even know what tool I just grabbed hold there. Where's that retracement most likely to go? Well, my study tells me that it's probably going to go somewhere between the large triggers and the synthetic. This is where the retracement is most likely to happen. Are you with me so far? Reversal bar begins with a pullback. And I can pinpoint where that retracement is most likely, not guaranteed, but most likely to retrace by using large and synthetic triggers. And then I say, well, that's an awful lot of space. I like precision. This little 1-to-1 right at the bottom of the triggers, that's where the market's most likely to bounce, off an area inside of triggers. Guys, you're going to have all of this on the reversal bar. You're actually going to know it over here with a little bit of study. I'm going to right click on my chart, and I'm going to put a buy limit order a couple ticks above that area inside of triggers. Are you with me so far, everybody? This is what it's going to be like in a live market. And the market's coming down at me, and I'm like, oh, I just want to jump in. They're going to go without me, but I don't because I'm following rules. And it gets closer and closer, and my palms are sweaty and my heart's racing, and closer, and it's almost there. Egads and little fishes, I'm in a long position. I'm in a long position at 63.32. And look at my large chart. It hasn't blinked. It hasn't budged. It is odds favorable, clear path. And then watch this. Oh man, it went against me. I'm down a tick. I see negative. There's red numbers. Oh, abort, abort, abort. It's the end of the world. No, it's not. We're still in the retracement zone. We're still just above that support. And look at this. Magic. Right off the support, right at the large triggers. So when we talk about circling tails, I'm going to put a circle right around the bounce. And watch this. Oh, that circle lines up with the tail on the large chart. Tails are a historical study, ladies and gentlemen. Tails are what you do to see what happened after the fact. You're using a small, fast chart to define where that tail is most likely to form. So when it looks like this, I don't see a tail. This push down, where's my arrow? I lost my arrows. Come on now, there it is. This push down, is what creates that tail. And check this out. If I take an arrow again, you'd think I'd know right where it was, right? I just did this. This push up is inside of that exact same bar. So all of this, I love doing these examples, guys. This is fun for me. Thank you for giving me this opportunity. Everything that you just did to define entry happened inside of one bar. So get over there. So inside of one bar on the large chart that defines momentum and path is a pullback, a bounce, and continuation. Does that make sense? You guys that are wondering if we trade tails, we don't trade tails. We predict where the tails are most likely to form using rule number 3. Guys, the precision is freaking amazing. I love it. I get giddy when I pinpoint where the market is most likely to continue. So let's do it again. I'm going to go back. Let's do this one. I'm going to circle a tail. I think this is the one that no, that's not even the one that I took this morning. Let's go forward. Fast forward. There was one right before class started, I think. It was the ES. We're going to go to the ES because, oh my gosh, the pattern's the same. Let's do this one right here. It just happened. So, large chart, momentum and path, right? That's the first thing you have to identify. Thanks. I appreciate that, Andrea. Uh-oh, what did I do? All right, guys. So let's do it again, new kids. Do I have strong triggers? This is what I ask myself every time. Are my triggers strong? Do I have momentum? Is this a market where the odds are favorable for it to continue down? Remember, first bar. What do you think? Risky, talk to me. K-Jess, give me a Y or an N. Jared, do you see it? If you don't, I want you to say, Mark, I just don't see it. Let's talk about it. Let's go define momentum again. You see it, K-Jess? Cool. So let's do it again. Price has not reached Fibonacci support. You don't see momentum, Jared? No worries. Let's talk about it. You do see momentum. Are you just messing with me then? Okay. So you see momentum. So watch this. Jared, I'm gonna give you some good stuff. Most current bar, first bar, always the first printing bar. What color is the background behind the bar, ladies and gentlemen? It's red, right? Red equals down. I'm looking for short trades. I'm looking for my rules to be met. So once I define the color, I say, do I have strong triggers? And I say to myself, well, I think I do. I'm not sure if I do. I might. Let me go back to my study materials. And maybe you need to study this a couple times. Small separated from the large. This is always my look for strong triggers. And notice that it doesn't have anything to do with Fibonacci. It has nothing to do with divergence. It has nothing to do with your entry. It's nothing more than the separation. So if you're struggling with momentum, you might be looking for the trade and not the advantages. This is my first advantage. Can you give me a Y? If you feel good about that. Jared, does that make sense? We got momentum? That's the first thing we look for. So once I say, well, absolutely, I have momentum, life is good, what's my second rule? No termination conditions. Well, the first piece to define a termination, guys, this is one of the reasons why I use words so much in this class. To define a termination condition, first, price reaches an area. Well, I can say without a doubt that price has not reached Fibonacci support. So that's a good sign. Does that make sense? And these 1-to-1s actually stopped printing, which means they're out of the equation. So I haven't touched support. All my triggers are through whatever might have been up here. So I have a clear path. I have room to reach my target. Does that make sense? We getting there so far? I like that we're breaking it down like this, guys. The only way I know you need help is if you tell me you need help, and you guys are killing it today. Now, let's do this. You guys see the clear path? Room to the target? Who's looking at this right now and saying, man, this is some crap. I'm not taking a trade with 6 ticks profit potential. I'm almost to the target. I'm almost there. Man, why would I even want to think about taking a trade like this? There's no room to make money. I did that all the time. Guys, it's not a termination until price reaches it. But watch what happens when we follow rule number 3. Are you guys ready to go look for an entry? We have momentum. We have path. And Roy says, Mark, this is grade A baloney. There's no room to make money. All right, here's our small chart, guys, and it's going without you. You're not getting paid. But out of nowhere, there's your reversal bar. And it's not a coincidence that the reversal bar prints right where that yellow box was. So now we're going to say, all right, there's my reversal bar. Where's the market most likely to retrace? Somewhere from the bottom of the triggers to the top of the triggers. Is that right? This is where the retracement's most likely to go. And I'm going to give you guys a little hint. If your reversal bar dissects an area, that area is not producing a bounce, right? If I throw a tennis ball at a wall and it goes through the wall, that wall is not producing a bounce. So now I have to say, where are my areas most likely to create a bounce? I have one area inside the retracement zone that's likely to create a bounce. Can you give me a Y if you're with me? Large chart hasn't budged. Roy's still mad because he doesn't have room to make money. That's all right, Roy. I'm going to right click. Well, I can't put a sell limit in because the market's trading in the wrong spot. So this horizontal line, 2 ticks below the midband. This represents where I want to put my limit order, where I want to enter this market. And if the market comes to my line, ooh, did you see that? They tried to fake you out right there, but it's still going up. Boom. Roy, you're in a short trade. Risky, you're in a short trade. And then Roy, you want to see the cool thing, brother? Look at how much room you have for profit now by waiting for the pullback to the area inside of favorable large triggers. Where should the stop go? The stop should go where the market shouldn't, right? We're going to get it up here 4 or 5 ticks above these trigger lines. So we're in a trade. We have the advantage of momentum and path. And guys, we have entered the market where the market is most likely to continue. Is everybody with me? Roy, did we just have an aha moment? Telling you guys, when you tell me what you need, I'll give you what you need. So what are we waiting for? According to the KISS plan, a reversal bar. A reversal bar from the area inside of favorable large triggers. There's my new risk. So if we were in at 83.50, $100 is 81.50. Your reversal bar hit your first profit target. You're now break even and $100 is in the bank. 80.50, or no, 79.50 represents $300. Guys, it didn't get there yet. It's dancing. Is it going to stop us out? It did. We only made $100. Does that make sense, everybody? We made $100 and we exited break even. That's the new user stuff. That's how you're going to do it as a brand new user, as you learn to trust your indicators, as you learn to read them. You guys want to have some more fun though? Odds favorable, clear path. Am I at an area inside of favorable large triggers, guys? What do you think? Doesn't that fit the rules? Let's see what happens. I'll be damned. Small chart fluctuation. So if you're a brand new user, you probably got in, made $100, got out break even. As you grow with the software, you're going to say, okay, there's my $100. I still have every advantage. I'm willing to keep a little risk on the trade, or I'm willing to re-enter the trade. It reversed off of the mid-band, Jared, because it's a pattern. When the large chart has odds favorable momentum, when the large chart has a clear path, the most likely spot for a bounce is an area inside of triggers. That's it. So we identified through a repeatable, testable pattern where the market is most likely to continue down, and you have a plan to help you capitalize on this. But what you have to do is you have to first understand this, and you've got to learn the reasoning. And guys, once again, look where the circle ends up, right at the top of the tail. So one of the things that you can do, ladies and gentlemen, if I click on one of these trades from the spreadsheet, that one's no longer available. Some of these are a few years old. I may have to go through and clean this thing out a little bit. Well, that's my picture. Odds favorable, clear path, pull back. Let's get some Nexgen users in here. So here we go. Odds favorable, clear path. And guys, look at where it bounced to continue with the trend. At an area inside of triggers. Let's click on a different one. Odds favorable, clear path. It bounced down at an area inside of triggers. Jared, do you see how the language is more important than the names of the areas? Momentum, path, bounced at an area inside of triggers. It's only three things that produces this trade. Guys, this particular trade was taken in 2022. Let's try another one. Odds favorable, potential to break, pull back to an area inside of favorable large triggers. When I say that it doesn't have to be difficult, I mean that it doesn't have to be difficult. But what I really am stressing is that you need to learn these three things. And once you learn these three things, guys, life is easy. If you're chasing the money, you're missing the advantages that produce it. Does that make sense? Was that helpful to you guys that are newer, that are maybe like, man, I got a couple things, I'm getting closer, but I'm not quite there? I promise you, if you tell me what you need in this room, I'll give you everything that I had. Jared, does that make sense? It's that magic phrase, area inside of trigger. That's how we define entries. We don't say mid-band inside of triggers. We don't say fib inside of triggers. We say area inside of triggers, in that retracement zone. And guys, that's the golden goose. That's the keys to the kingdom. That is sunshine and rainbows. Thank you so much for giving me the opportunity to break that down a little more for you guys. Let's see if any of the pictures posted follow that path. Pete, let's see what you did, brother. Pete said, strong bottom, everything is up, odds favorable, did not have an area inside of triggers. He takes a shot, gets paid, gets out break even, re-enters, gets out, gets paid. Rule number 3 not met, guys. But Pete has some time in the market, and Pete says, With momentum and path, I'm willing to fudge a little bit. I'm willing to create an exception based on my ability to read the indicators. Basics is never old, Paul. No, Jared, how could you be at 100% yet? I've been doing this for almost 6 years. I'm still not at 100%. I would hate to believe that I've learned everything. So Jen, we saw this one earlier, guys. Odds favorable, clear path. So here's the question that I want to ask you. Risky, Estefania, KJess, do you see how the area is not inside of triggers? So Jared, this goes to you too. The rules say area inside of triggers. Is this area inside of triggers? It's not, right? Jen knew it. She identified it after the fact. And she said, note to self, rules work. No, rules did not. And there's an avoidable loss. And then she goes, let me get my head on straight. Momentum, clear path, pull back to the area inside of triggers, and I'll be darned, Jen gets paid. Pretty awesome, right? You get to see both sides of the coin. Rules met, rules not met. Jen, that is like 17 times we've looked at that picture today. This is such a great picture. Thank you. Owe you a non-alcoholic beer if we ever come face to face. All right, scroll down. Let's see what's next. Sound effects make it better, guys. Remember that. All right, Paul. Paul's been with me a long time. Odds favorable momentum. Do you see it? Nothing in the way. Pull back to the area inside of triggers. And Paul's making money. Guys, this is live today. What is this, Paul? RTY? This is the Russell. Todd P., you were asking, how come you don't talk about the Russell? Well, because Paul wasn't posting charts. This is the Russell. Odds favorable momentum, clear path, pull back to the area inside of triggers. So is it possible? I thought it was funny because we talked about it yesterday and now Paul's posting them. So this pattern on the Russell is this pattern on crude oil, is this pattern on crude oil 5 years ago, is this pattern on crude oil 4 years ago, is this pattern on crude oil. Like, guys, it's the same thing. We're just learning the pattern. Paul, great trade, dude. Great trade. Who's next? Boaz. Odds favorable, potential to break. You get in early, right? Took not good momentum trade, should wait. Boaz, you took the I'm just going to jump in because everything is screaming trade, right? Everything is going, oh my gosh, it's going without me. How am I going to get paid? You guys remember when we talked about that, waiting for reversal bars? How am I ever going to get paid? Let me jump into the market. Boaz, your failed momentum trade with this look turned into the perfect trend trade. You took a shot that said, hey, in case the small crowd doesn't fight, I'm going to be in this market. But if they do fight, I know exactly where they're likely to fail. I'm very comfortable holding this trade and making all the money. Boaz, it's the exact same pattern with an early entry, but it fulfilled every expectation. Great trade. Great trade. You just had to sit through some shenanigans to get your payday. But with the large chart advantages, the payday showed up. All right. Is it starting to make sense, guys? It takes a little bit. All right, so Joel, no clear path, hold my breath, wait for market to determine my next move. While I wait, I'll learn to read the charts. Joel, you can read the charts. Stop suggesting that you can't. You understand momentum. You understand path. With all the love I can muster in my heart, stop telling yourself you can't read your indicators. You can. Your challenge is waiting for the rules to be met. That's everybody's challenge. And there was your trade. Jen took it, and it was perfect. Nice chart read, Joel. I don't make a lot of requests to you guys, but I want you to talk to yourselves like you were a 4-year-old as you learn to trade. I want you to love on yourselves like you need all the love you can get, because we never celebrate victories. We always, always find our failures. Very erratic jumping market, odds favorable momentum, nothing in the way. Ron says, I'm going to find a way. Smalls outside, momentum on both charts, rodeo style, easy $100. If you do well, Gary, you can have all the ice cream you want. That's one of the perks of being a grown-up. Ron, great trade. Remember when I told you guys if you learn momentum and path, you'll find a way? Ron pioneered that move. Embracing momentum and path from his study in the high probability trend trade so that he could find the trades outside of it. Paul, momentum, potential to break, pull back to an area inside of triggers, gets paid at trouble, and he's holding for the big move. I'm a broken record. Have you guys noticed that? I'm a broken record. Momentum, path, entry. All of the people that are posting winners seem to be doing exactly what we teach in the first hour. Have you noticed that? The losers that we've seen have deviated from that plan. Weird. Market reminds me of that OPEC red news all day. Is it doing that? Go cut grass in bare feet. Oh, I love that. See you tomorrow. Take care, Ron. Have a great afternoon. Watch your toes. Watch your toes. Great trade, Paul. Momentum, path, entry. Momentum, path, entry. Momentum, path, entry. In that order. In that order. Aaron, we saw your tails. Let's see what Paul did here. Paul said, third attempt to break. Don't you dare do it, Paul. Eventually, we learned how to respect termination conditions. Aaron, remember when you said consolidation and chop seems to get you? Let me show you one of the absolute beautiful things about rule number 2. So not only does it say, I did, Wayne. Wayne, your charts are so hard to read, brother. I'll go through them again if you need me to. You have everything so squished up all over the place. They're difficult for me to read. I'll go through and I'll see what I can do with you. And I'll try to be helpful. Aaron, check it out. No long trades, no short trades, no long trades, no short trades, no long trades. That's a pretty clear range, wouldn't you believe? And there is one with momentum and path. Fit the rules, maybe a good way to get paid up to the fib. There's the potential to break with momentum, maybe a good way to get to the fib. This one right here, directly into a termination condition, and look what happened. So Aaron, a lot of times when we get caught in consolidation, a lot of times when we get caught in that chop, as you like to say, it's because we're trying to anticipate breakouts. It's because we're trying to do things without momentum. And what you'll find very often is that rule 1 and 2 are this huge safeguard. And when you see terminations happen above and below, the way they did here, you could actually say, and this is a pretty good range, there was opportunity within it, you could say, for me to look for a short trade, I choose to let it break out of the area that continuously held. For me to try a long trade, this is exactly what Paul did. I choose to let it break out of the area that previously held. And I think rule number 2 does a wonderful job of keeping us out of chop. And rule number 2 does a wonderful job of building patience. And there may be some opportunities in between the trouble. And those are the ones that you're going to look for, the ones that have momentum, the ones that have the path. And then you'll probably find a way. Does that make sense, Aaron? And that's the ES. Is that this morning at 10:44? Well, I had a fib there. Paul didn't. I think. Is that the same spot? He may be in a different time zone than me. One of us has different data there. But man, I love it. Rule number 2 is awesome. When you combine it with rule number 1, it's amazing. Things get easy. All right, Wayne, let's get you taken care of, bud. Scrolling, scrolling, scrolling. I like that picture too. All right. So Wayne, this is what I was saying was really hard to read for me. I mean, it's so squished. So let's go through this. Everything says down, you went long, and it didn't work out. But when you went down with everything saying down, life became easy. The white bar pattern needs a termination condition first, and it didn't have it, and you're able to squeak a little in there with the weakness, but it's aggressive. Once you have the termination condition, that long becomes pretty easy and a big winner. Does that make sense, Wayne? You can really sum all this up on this chart. Fighting everything doesn't work. Going with everything worked beautifully. A little early, you're able to eke a little bit out. But once you have that termination and you get on the good side, holy crap, there's Moneyville population U. So if I presented this chart to my brother and he said, Mark, let's talk about everything that you did here. If you lose, come on now, he would tell me, if you stop trying to fight, that money stays in your account. If you be a little patient, you don't have to put the risk on a risky trade. And then if you trade after a termination, the money's easy. So he would say, that one is probably better left to someone else with deeper pockets. That one is a very well-managed shot. That's going to be the easy one. That's going to be the easy one. Does that make sense, Wayne? Not telling you how to trade, but if we had to rank them 1 to 5, that's a -5. That's a 500. That's a 2. Taking a shot with the weakened triggers, and then that's a 5 again. Good stuff, man. And all of this is too tight for me to have any idea what's really going on. I apologize. And then on this one, we're looking at odds favorable. We're looking at a clear path. You took the pullback to the area inside of triggers. You did your mid-band trick, and it's beautiful. And you make money. I love it. Absolute rock star on this one. And then the thing that happens is you still have every one of your rules met. Wayne, that's another trend trade right there and another 220 for you. And I love that your target's met for the day. That's rad. And you left. But do you see how that one was the perfect Wayne entry too? It never went where the market shouldn't. The rules were all still met. And that was a good one. If you were present, I know you went over to TV. A second beautiful trend trade. This one's great. It's so easy when you trade with momentum. It's so easy when you trade with path. And guys, I think that that's been a pretty good recurring theme today. The easy trades, the easy victories, the ones that you guys are showing me with the highest probability and the most money going in your accounts, revolve around momentum and path. Once you understand it, you'll find a way. Everything says up. This market is trending strong. Cab just jumps in. He goes, you placed a limit order 2 ticks below the mid-band and waited. I don't know how you did that because you're in just jumping in. And then it goes to the mid-band. Trade the mid-band until it doesn't work in a strong trending market. And you make money. Nicely done. So it was more of practice of walking away ahead. I like that. Dude, Wayne, that is such an important lesson. Were you here yesterday for this? For you guys that are going to the funding company, I put this together yesterday and I shared it in the room. And I want to address that, Wayne, being able to walk away ahead. Because I don't know about you, I have been ahead $2,000 to $3,000 in a day and ended the day negative because my Superman cape came out and I stopped following rules. Establish goals and hit goals. But I put this together because this was pretty interesting to me. These are the different account sizes in the Nexgen funding company. These are the goals to pass them, to get to the point to where you can put yourself in a position to get paid in the funding company. And this is 5-day goal. I'd love to. This is the 5-day goal. If you to make consistent daily profits, you only have to make $250 a day to fund a $25,000 account in 5 days. And then it'll take you another 5 days to create the buffer so that you can get into the payment. And it changes based on the size of the account, of course. So your daily goal, if this is the best you do every day, if you stop at $250 every day, every payout is $2,000. Every 8 days, you're going to produce $2,000. For your first 60 days in these funding accounts, guys, you can only pull out $1,250 in that account. That's it. So in your first 60 days, there's 5 payouts. Little over $6,000, making only $250 a day. Stopping at $250 a day. $6,250. And that gets you through your probationary period, which means that now you can make 90% of everything that you make. And here's the cool thing, is every payout in that cycle, you're not claiming $750 of your profits, but they're there, they're in the account. So when you get to your 6th payout outside of the probationary period, you're sitting on $3,750 in your account already above the buffer, and you get 90% of that. So if you keep that consistency, what's 90% of 2,000? 1,800 plus the 3351. So you've already made 6,250. Your next payout is like over $5,000 from the unused at only $250 a day. So I made this really just to stress consistency. And I'm telling you, if you have a good plan, $550 a day is pretty easy. And when you start using copiers, this is the other thing I did. At $250 a day, with copying, just one copier mirroring the account, your payouts become $2,500 for the first 60 days, right? You make $12,000, and then you do it times 5, and that 2 becomes 10, and that 10 becomes 20 times 10. So it's about consistency. I dropped that in the room. Consistency pays the bills. Nice trade. I am long-winded today. Sorry, guys. I think that a lot of us struggle where we don't have to. I know I did. I struggled where I didn't have to. All right, Better Dad. Hey, Estefania, have a wonderful, wonderful rest of your week. I'll see you next week. Thank you for popping in and saying hi. Odds favorable, clear path. Oh, and you re-entered on the reversal bar. Yes, Better Dad. Beautiful. And then trailing stop. And if you got the right entry, the one that we did in the classroom together, thanks, Todd P. I appreciate that. You took the second entry. Guys, remember when I said, hey, are the rules still met? Better Dad knew the rules were still met. He gets in with confirmation off the mid-band, and easy money. Beautiful trade. Better Dad, how did it feel? With momentum and path, pretty effortless, right? There's a way to get paid. Beautiful. Perfect. Outstanding. All right. Jump the fudge in. Odds favorable. No clear path. Large not through the fib. I agree. You entered here. What did you have? About a 7-tick stop, Better Dad? That's okay. I still have kid issues. They're grown men with thicker beards than I can grow. 6 to 7. So can I give you my thought process on this trade that you're taking? Can I assume that you're thinking chili dog a little bit, right? You're thinking that chili dog trade that relies on momentum. So there's a way to take it where it's really easy, and there's a way to take it where you set yourself up for heartbreak. If you're going to try to ride this momentum here, I just want you guys to remember that lines on a small chart can create a bounce too. Lines on a small chart can create a problem too. So the highest chance of success on these just jump the fudge in trades, let the back of the bar clear trouble. Let the back of the bar clear trouble on the small chart. Let it get above that divergence high. Let it get above that midband. Let it get above that fib. And what happens is now there's nothing in the way and you still have momentum on both. Let me see if I can find a good example. And the ES has just been crazy today, but this is a good example. You don't quite clear it. You're still at the decision-making point, better dad, and then it becomes the retracement. And you don't quite clear it, and you're still at the decision-making point, and then it doesn't quite clear it. Jared, this isn't your trade yet. Remember that. See how the back of the bar, the bottom of the bar, clears the area? It gets past. This is taking price beyond the decision-making point. It says now price action is away from that line that could create a bounce. The market's more likely to continue in the direction. Does that make sense? So Ron, I don't know what you mean by semantics. So one of the things that Ron created this chili dog. He's off mowing barefoot right now. And if you're following his plan, well, that's okay. If you need me to say it differently, I will. How would you have said it? What can I say that makes it click with you? Bottom of the bar. Okay. The bottom of the bar clears. I like it. I don't think you're wrong at all. I'm using the language that Ron gave me, and that's probably why I do it. So let's look at it at 1041. Thank you for that, Jared. I actually do appreciate it very much when you guys do that. No, you're not. But if that's how you hear it so that it makes sense more, then it's important to me to know how you hear it because my job is to make sense of things for you. And I really do. I'll never get upset. So check it out. Odds favorable momentum. Bottom of the bar clears the one-to-ones. I like it, Jared. I'm probably going to start stealing that because that makes more sense, right? Than back. Bottom clears it. When the bottom of the bar clears, this is where the market is, guys. It's up here at 86, which is right here. Nothing in the way. Guys, that's the easiest $100 you're ever going to make. And if the bars are going down, nope. So let me show you. The bottom of the bar clears, the market is right here. When the bottom of the bar clears, the market is right here, David. So there is your potential entry. There's your potential entry. It didn't work. Better Dad, are you asking about a trend trade? Or are you asking about this chili dog trade? Okay. Has nothing to do with the triggers. Your bars clearing have nothing to do with the triggers. The chili dog trade relies on momentum and getting all of price beyond the trouble spot. Has nothing to do with the triggers because when you enter the market up here, it's still a 50-50 trade. It will always be a 50-50 look. Large chart, not triggers. The triggers define momentum. This is where, no, both charts. Triggers define momentum on both charts. That is where the similarities between a trend trade and that jump in trade go away. I will use triggers for momentum. They're either strong or they're not. Does that make sense? Once I have strength on both, it doesn't make sense? Okay, so this is good. This is good. Thank you. For a high probability trend trade, better dad, what do you need? You need strong triggers, right? You need a clear path defined by the triggers, by the trigger location versus the area. And then you need a pullback to an area inside of triggers on the small chart. That's your rules for a high probability trend trade. Does that make sense? I love breaking it down like this. Just work with me, better dad. I'm going somewhere with this, I promise. I promise. I'm going somewhere with this. Momentum is defined by triggers. Are you comfortable with that? Of course you are. You're good at it. Let me show you something. This is the rules for the high probability trend trade. And they rely on the understanding that for this trade, a clear path is defined by small and large triggers. Come on. There we go. By small and large triggers above the area, right? That's your trend trade. I know we're not talking about trend trades. We're talking about chili dog trades, right? That's where we're at, chili dog. So better dad, what I need you to stop doing is trying to make this a part of the chili dog trade. It has nothing to do with it. Because if I write the rules for the chili dog trade, I have to have strong triggers, both charts. Price must clear areas, bottom of bar for longs, top of bar for shorts. Ah, that's why I do it, Jared. Because that's why I say back. Oh, I just had an aha moment. So bottom of the bar must clear for longs. And then let's swing this around. Top of the bar must clear for shorts. Has nothing to do with triggers. Whoops. For the short trades, you're right, David, 100%. Sometimes I have to hear it a few times. And then what do I do for the chili dog when my rule is met? My rule is met right here. The market is trading right here. Jump the fudge in and hope you can make $110. So better dad, one of the challenges, and I did, and I was going here for a reason. And sorry if it pissed you off that I was talking about something you didn't want to talk about. These are the rules for the high probability trend trade. These are the rules for the chili dog trade. And for all the other trades, I can create a different set of rules. So when you take a specific trade, guys, when you begin to venture outside of the high probability trend trade, don't try to force your next trade to be the high probability trend trade. You have to take the rules for the individual trade. That's why I like naming trades. And I even made this. Why name your trades? So better dad, if I'm in a high probability trend trade, I have a very specific set of rules to get me into the trade. If I'm taking a 50-50 trade, I have different rules. And they may use the same parts, right? That carburetor from the 43 Studebaker might fit on the 52 Dodge, but I'm going to make the Dodge run. So I have different rules and different exit conditions. If I am in a momentum trade, I have different rules and different exit conditions. So one of the reasons why I encourage you guys to learn the basics first is the basics teach you to recognize the momentum that you need for the next trade. Does that make sense, Better Dad? The chili dog has nothing to do with with these termination conditions, and that's where the struggle comes in for people. Is momentum is always momentum, no matter what kind of trade. You either have momentum or you don't. But when you start venturing outside of a high probability trend trade, well, then the areas have a different role. The areas play a little differently. The entries become different. The management becomes different. So Better Dad, as you move forward, and I know that you're moving forward and you're beginning to study this, try to learn the language for this one, and it's going to be difficult to not confuse the two. One of my favorite classes is I had a lady that was amazing, and some of you have taken her class, and she was looking for high probability trend trades, and she had just started adding in the 50-50 trades. And for the life of her, she would take high probability trend trade entries and manage them like a 50-50 trade. Or she would take 50-50 entries and manage them like a high probability trend trade. And she kept confusing the two, and they're very different. And what it was doing is it was killing her success. She was struggling because she was exiting too soon on the runners because of one divergence when it was high probability, or she was holding too long when divergence was printing on a 50-50. So keep it very basic, guys. Get really good at one thing, and then when you go to the next thing, remind yourself it's a different trade. It has different rules. It has different scenarios. And Better Dad, what you're doing, everything you're doing is totally normal. Everything you're doing is exactly how people grow in the process. So if we were looking for your chili dog trade right here, you have the momentum, that's consistent. Once the back of the bar, the bottom of the bar, the tail end of the bar clears these yellow 1-to-1s, where's price? And I think this is a different trade. I don't think this is the one we did. Price is right here. That may be the same one. So then you say, okay, my rules were met. I took my entry. You're not going to manage this like a high probability trend trade because the only thing getting you in is momentum and nothing in the way. These are the trades where Ron says I'll risk very little because if momentum goes away, I may see this. And because I'm in at 86, I'll get out at 88.15, right? 88.25. I'll make 112.50. And then I'll exit that trade because the only thing that it's relying on is a strong push in the moment. It's not a trend trade. If I took a trend trade down here somewhere, I'm expecting momentum and path, to take me up here. My expectation is different from a momentum trade. Does that make sense? Is that helpful, you guys? That's why we focus on one trade first. That's why we keep it simple first. That's why we don't look for all the trades. We look for the best trades and we find a way to make money. Better Dad, did you see all the circled tails yesterday that I did? There's so much opportunity in the market. There's so much opportunity in the market. We just have to teach ourselves to find it. And very often, there's a lot more going on than we see when we're brand new because we talk ourselves out of trades. We talk ourselves into trades. And it becomes harder to make money because of our inconsistency as we learn the process. So keep the process simple and life gets pretty good. You're forming a response? Okay. No worries. I look forward to it. Guys, what else do we want to talk about today? I think we've covered all the pictures. We went way sideways today, which I love. I love. Got to go. Have a great afternoon, Better Dad. You were so right about north of 14th Street. It is, David. Did I miss it, Boaz? Sorry. Oh, I missed a couple. My bad. See, I got on a tangent. Let's go through these. Jen, always great to see you. So odds favorable momentum directly into a termination condition. And Boaz, your entry chart is wonky as all get out. Do you see how your triggers are all messed up here? That's a tough one. But it's okay. But let's look at it anyway. Odds favorable into a termination. You take the perfect entry. It never goes where the market shouldn't, but you get stopped out. And then you have to re-enter all the way up here. And that termination condition scares you out of the trade. And then you do make money. So Boaz, the one thing that I can say on this is you're trading into a termination, but this is where the market is most likely to bounce, and you allowed yourself to get stopped out right at the base of those triggers. This is one of the reasons why 4 to 5 ticks. If you were using this reversal bar, no problem. The rules are still met as far as you're concerned. You could probably get in on the reversal bar. But you need to refresh data and fix those small triggers. 4 to 5 ticks below the triggers, guys. If it was the reversal bar, Boaz, that makes total sense. But you're trading into a termination, right? And you traded into it twice because of momentum. It's not a bad looking trade. This is if you're gonna take a shot, this is the way to do it. You just got to trust your stops a little bit. Like, commit to it. Get in there. Commit to your trades, guys. If you start doing this, if you start getting stopped out in retracement zones, jumping out break even on the first contract, it means you're nervous. Is that fair, Boaz? It means that you're nervous. It means that you're concerned. Guys, that's usually a pretty good sign that maybe that's not your trade. Maybe you're working on hope. But Boaz, check this out. Once the bottom, the back of the bar clears that divergence high, it's pretty easy, isn't it? You don't have to trade into areas. You can let it get to the other side and still make darn near the same money. And that goes back to the idea that these things can create a bounce. And once you're beyond them, life gets pretty easy. Good stuff, man. All right, Steve. 942. I'm trying to keep up with your lines. Odds favorable momentum. Clear path. Wrong side of the triggers. We've seen this one a lot, right? And I like this, Steve. I love that you put even though outside of favorable large triggers. Mid-band entry because of odds favorable momentum and clear path. And I took the entry even though rule number 3 wasn't met. And it didn't work out. Price hit large and synthetic triggers, bounced off, exited after candle reversed down. Price not able to hold the up thrust off mid-band. Felt momentum was increasing down. Exited for a quick 2-tick loss. Good management. You knew that you were on the wrong side. You managed aggressively. And then when everything changes and turns, you take the perfect entry. Your stop makes sense. You add on to it because it comes back for the same entry. You take 3 off at trouble and the final at the fib. Outstanding. And I believe that the language on the last chart we saw that took the exact same trades, my rules worked, breaking my rules did not. Does that make sense, Steve? The rules produced a winner. Deferring from the rules produced a loser. If only it were that simple. David, I am so latched on to yesterday when you said if only they could all be this easy. Ladies and gentlemen, they can all be that easy if you wait for them to be that easy. Good stuff. I like it. What else? You guys that have swapped over to TradingView, do you have any questions? Miss Anna, I know that you're there. Wayne, is there anything I can do for you? He's already split. I know some of you guys are going over to TradingView and looking at it. I'm here to read your charts. I'm here to look at your charts. Odds favorable momentum, clear path, pull back to the area inside of triggers, And you are already up $120 at the time of this posting. Does anyone see anything wrong with this trade? I don't see it. I see small and large below the areas. I see separation between the two. I see the perfect entry at 63.50. How did it turn out, Joel? Looks like it's still marinating, huh? That's okay, Anna. I get it. I get the same way sometimes. One of the things you could do is carry a notepad, and when you have a question, write it down. Have you ever gone to an interview and you thought, man, I'm going to ask all of these things, and you get in the interview and you're like, crap, what was I going to say? My wife has 32 pages laid out in front of her when she does interviews over the phone for jobs, so she doesn't forget anything. Just jot them down. We'll cover them one by one until they become easy. Miel, good morning. When you're done reviewing screenshots, I need your guidance on the trade copier and how that works. When you pass an evaluation and want to use the copier, when you can do it exactly, and do you have to pass more evaluations on it? You don't do interviews, you were the boss? Yeah. Well, my wife is the boss, but she interviews to become the boss. She does the panels in front of the CEOs and the CFOs and stuff like that. And she sits down and she interviews them. She doesn't let them interview her. It's kind of funny to hear the stories. Got you, Jared. Thank you for that. So, Miel, you're going to love this answer. Let's go to the instructions. Let's go to the instructions. Let's see if trade copier is on here. If not, we probably need to do that. Nice job, Joel. So, Miel, let me answer the easy ones first. When you pass an evaluation and want to use the copier, yes, you have to pass. You have to pass to get paid. But let me sign in real quick. Don't look at my passwords. Oh, just kidding. They're all asterisks. So when you have a trading account, obviously with one trading account, you can't copy it, right, Miel? Of course not. Doesn't make sense. Once you have more than one account, you can use the copier, whether it's an evaluation. So let's say I pass this account. And then I'm going to try and use pictures. So I pass this account. And once I pass this account, I buy a second account. Now I can use the copier. So I buy this account, and this is an eval. This is an eval. And I buy a second account, and this is an eval. I can use the copier, and I can pass two evaluations at once. Does that make sense, Miel? If this one is now live sim, I've passed it, and then I buy this one, and this is on evaluation, I can still copy it. And what I'm doing is I'm working for payouts in this one, and I'm using the exact same trades to pass this evaluation. And that just goes continuously. You don't have to pass an evaluation to use the copier. You can, if you're comfortable in your plan, Miel, buy 10 accounts, copy all 10 of them, pass 10 evaluations at once. If you're that confident in what you're doing, absolutely. A lot of people will buy one and pass it and then copy it and let that pass the next one. And when the next one's passed, copy it. And what you're doing is you're building up that consistency over and over. Does that make sense? You have to have two or there's nothing to copy, right? So one stands alone. Once the second one is there, I've got something to copy and a place to put that copy. Awesome. Good question. Did that get you taken care of? And then once you have the copier, it's easy. You'll pick your lead account and you'll pick your follow account and they'll just mirror each other. Yeah, let me know, always. All right, Jared, and for everybody, we're going to do market replay. You decide to slow things down to concentrate on only one market. The crude, are there enough trades? There are enough trades, and life is so much simpler that way. Amen, Steve. Isn't it crazy that you don't have to trade 5 markets and 10 trades? One market, 1 or 2 trades, guys, and life is good. And life is good. There's so many of you that have to go through all of it in order to get to that point. I had to. And let me share this real quick, and then we're going to set up market replay together, guys, because this is the Mark Novak story. And I want to share this with you in the same way that I did it. And this is it. So when I started right here, I thought this is going to be fun and I'm going to be rich. That's it. And if you haven't thought that, you probably haven't really researched futures. And you're like, this is awesome. I can't wait to make money. I can't wait to buy a car, to get a boat, to have all this stuff. And then some jerk tells you that you're going to have to study a little bit, that you're going to have to learn some patterns, that you're going to have to recognize some stuff. And what happens if you're anything like me, right here, you ignore the jerk because you're an alpha. You've been at the top. You're the teacher, not the student. You're the boss. Yeah, my brother was the jerk in this case. Jared, I'm your jerk. And you're like, I don't want to do all that. My last name's Novak. I'm just going to take trades and get lucky on simulator. And you have 4 jerks, right on. And what happens is right here, this is my story. I went live too soon. I didn't know why I was entering. I didn't know why I was exiting. I hadn't done any study. I hadn't participated in class. I didn't do anything the jerk told me to do. And then I did this. I remember it like it was yesterday. It was 21 trades. It took about 2 hours, not one winner out of 21 trades, guys. And what it did is it punched me in the gut, and it threw me right into the I don't know shit stage. And guys, I truly didn't. I didn't know anything. I didn't know why I'd entered, why I didn't know anything. And it was right here where you're going to make a decision, guys. And there's 2 decisions that people make. The common one, because people hate adversity. People hate to work hard. People hate to study. People hate to practice. And more importantly, people hate to put themselves out there and feel vulnerable. And they quit. I almost did. I was so mad at my brother for letting me not follow his plan. Or you follow the plan that jerk told you about. That one that says, have a set of rules and a checklist to get into the market. Know why you're going to get in. Know why you're going to get out. Take 1,000 pictures and learn the patterns. Track your progress. Accept the feedback and participate in class. And then suddenly, you find yourself here. And it's not a straight line, because you'll do this and get cocky and think you don't know anything. And then you get this and get cocky and think you don't know anything. And you do this and you make some mistakes and you're like, ugh. And these little retracements get less and less as you move forward, as you build confidence, as you establish trust. And then you get to I did it. And guys, everybody goes from the point of I don't know to I did it at a different pace. Some of you will beat the hell out of yourselves on the way up, even though you can read your charts. You're not following rules, and you think you can blame your inability to read charts, and that's absolute garbage. You can read charts. Some of you will find great success with a checklist, and then you'll become too smart for it. and you'll get away from it, and you'll struggle, and you go right back to believing you don't know anything, but you do. You just stopped following a plan. Some of you will try to find all the trades instead of the best trades. And the only thing you're going to find is losers. Guys, this path is for everybody. This is normal for everybody. I teach this classroom from the position of having made every mistake as a brand new user that you can make. Guys, the chip on my shoulder is huge. My ego is gigantic. I am 10 feet tall and bulletproof. And I believed because my last name was Novak, I was entitled to win. The same way a lot of people believe because they purchase software, they're entitled to win. There is a path and there's a plan, and it requires a little dedication and work to make $1 million a year. Otherwise, everybody would make $1 million a year. Can it be done? Absolutely. Can you do it? Absolutely. Are you willing to put the work in to get to where you want to be? And guys, if you don't identify your problems that need fixing, how are you going to fix the problems? Sometimes all you need is to drop a picture in the room and I'll identify your problems for you and I'll tell you how to fix it. And it usually just goes back to patience. It almost always goes back to patience. All right, I'm done in the pulpit, guys. Let's set up market replay. So you have your NinjaTrader, you're up, and most of you connect automatically and you see this green light. To do market replay, you are going to have to disconnect from live data. That's why I always save this for the end of the classroom. Once I disconnect from live data, I'm going to go back to my connections and I'm going to choose playback. And what it's going to do is it's going to ask me, all right, Mark, what market do you want to play back? And I'm going to say, well, NinjaTrader, let's do crude oil. And it's like, great, what day do you want to replay? And I'm going to say, let's go through yesterday, the 4th, because I made a couple mistakes. I missed a few opportunities. You're welcome, Roy. And I want to go back and fix those mistakes. So crude oil, 6/4/25, and I'm going to click download. And it's going to go gray on me for a second while it downloads. When it's done downloading, it goes back to normal, and I'm going to hit continue. And once I hit continue, I have a challenge. It's not showing me what I need to do. So I'm going to disconnect and I'm going to do it again because it's trying to mess with me. Playback. I'm just kidding. I did that because repetition creates recognition. Crude oil. And we'll just go the 3rd this time and see if it likes it better. And I click download, continue. There we go. And I get my 1983 Sony Walkman. I've got play, I can adjust the speed, and it shows the dates. Guys, we did the 3rd. So here's one of the things that gets people, is I want you to change the start date, was it the 3rd, to the 3rd? And I want you to put the end date on the 3rd. Most of you don't have computers that can launch space shuttles the way I do. So by having this the same, what it does is it makes sure that you're not going to clog up. Once you have this in place, all you have to do is open your workspace. So here comes crude oil, and it's going to start June 3rd at midnight. And I'm actually starting with momentum and the potential to break. Does everybody see it? So we're there. I'm going to put my ATM strategy in, and when I hit play, and remember this is the middle of the night, this market's going to start trading as though it were live. I can speed it up a little bit if I want to. You're going to find that you miss trades if you speed it up too much. But I've got momentum, right? I've got the potential to break. I think I want to take an entry. Let me hit pause. And let me go to the plan that tells me the best of the best way to take a 50-50 trade. So let me see. So I have to have a strong top or bottom. And yep, I've got a termination that reversed the market. And I have to have strong triggers on the 13.2 and the 5.1. Well, I've got them on the 13.2, but I don't quite have them on the 5.1. Ugh. Do I keep looking for a trade or do I stop right there because my rules aren't met? Well, My rules aren't met. I choose not to take the trade. I'm going to hit play, and we'll see what happens when I hit play. Is it going to give me that rule met? Maybe it's not. I'm going to crank it up to 100 and we're going to get through. And I'm watching and I'm waiting. And I'm going to pause right here and I'm like, okay, I still have momentum and the potential to break. I haven't reached that blue fib. My smalls are starting to break out. I've got a pretty good range, but because of the strong top, my rules say get in at the area inside of the triggers. And guys, you can drop one here. You can say, well, the reversal bar is going to hit that one. Let me put a backup here, whatever you want to do. Hit play, right? And let it play out. This is the middle of the night. It's going to be pretty slow. We'll go up to 500. Oops. I hit my termination condition. I have to cancel my trade and wait for my rules to be met again. And then I just hit play again and I go. So you can do this each and every day. Guys, I'm at 500. That looks like odds favorable, potential to break, strong top, dag nabbit, there's divergence. You guys want to see what happens anyway? I'm going to put a limit order just below resistance inside of favorable large triggers, and I'm going to hit play, breaking the divergence rule. And well, it didn't even matter because they didn't come back up to my entry. So now it starts over. There it is. I can pause. I can put it in place. I can check my rules. It got me with 2 divergences. Oh no, divergence kills a 50-50. So I'm going to pause this, guys. And your job is going to be to take a picture and say, Mark, I want you to see this. I had momentum, right? And you're going to say strong triggers. And you're going to tell me you had a clear path. And I'm going to say, no, you didn't have a clear path. That only had the potential to break. And if you go back to the KISS plan, divergence is one of the biggest killers of this trade. And look what happened. And guys, this is what we call avoidable losses. And look where the market went to. So now I've got odds favorable momentum. I've got the potential to break, but I'm not coming from a strong bottom. I'm going to buy the market. I'm going to break a rule again. And I'm going to hit play. And it was another loser. So guys, we're 0 for 2 on rules breaking. I didn't lose any money. I didn't lose any sleep. The dog isn't mad at me. My wife isn't leaving me. But aren't those some amazing lessons on following rules? And what happens, guys, is if you do that, if you stop it, if you pause it, if you insist on the rules being met, what's going to happen is you're going to see the potential of the software because you're actually following a plan. You're taking your guesswork out and using the pause button so that you can do it. So I clean it daily, Paul. I clean it every day. I also have a supercomputer with a killer graphics card, which is pretty good. 10K, we'll get right to it. So again, let me grab the instructions for you. Did that help, Jared? Seeing it done, seeing how you can use it, I hope. And it's going to take you a couple times. It's going to take you a couple times to get comfortable with it. But, well, Jared, watch the YouTube video, brother. There's your instructions again. Watch the YouTube video at 12:20 Eastern. If you had just told me, hey, Mark, I have to step away, don't do it yet, I would have waited. 10K, what does whiplash mean? I'm not sure. Divergence from fibs, smalls below the large, pull back to my mark and fib, down to large midband, counter trend trade. I don't believe this is a counter trend trade, 10K. This is a termination, small triggers roll. You sold the pullback to the small triggers. 10K, you know what? This is a trade that Nexgen started teaching in 2004, my friend. And you nailed it beautifully. When Fibonacci holds, when the small triggers roll, we used to say sell the pullback to the small triggers. It looks exactly like this. No, Paul, I love what I do, man. And I'm in your stupid time zone. It's like 9:30 in the morning. What else am I going to do? What else am I going to do? This is beautiful, 10K. There is absolutely no beatings. You let Fibonacci hold. You let the small chart sell the change, and you just capitalized all the way down to trouble. It's perfect, dude. It is picture perfect. Nicely done. Moved quick. Triggers, path, pull back, money. I love it. Triggers, path, pull back, money. Jared, are you here now? Because I absolutely positively refuse to let you walk away without seeing this and doing this. All right. So I'm going to disconnect from it. You're welcome. I'm telling you guys. When I was working in my last job, if you ever got fired by me, it's because I tried to save you 1,000 times. If you walk away from this room and you don't continue, it's not because I wasn't willing to help you. It's because you never asked for help. I will never say no. So Ninja Trader's up. Jared, the one thing that you can't have is you can't be connected to live data. So make sure that your connection is clear. Make sure that you're black over here. You're going to go to playback. And playback is going to ask you what market you want to trade. We're going to do crude oil. And it's going to ask you what day you'd like to trade. And we're going to do the 3rd. So I'm going to go back and I'm going to replay crude oil. And I'm going to do it from June 3rd, 2025. When I click download,